So I appreciate y'all for taking y'all Sunday night out to spend it with me. My name is Shereen for the people that do not know me personally, or Reen if you know me from around the way. Hey, Savannah. Hey, Natasha. Um, so the part of the reason why I wanted to do this at night is because I wanted to be able to provide the groundwork for you guys to put this into action immediately tomorrow morning. So that is my goal. For me, this is not successful until you guys really learn what I'm trying to do, and you're able to apply it and make yourselves better technicians, traders, or whatever your goal is in joining this session. If you have any questions, after I'm done going through the spreadsheet or the presentation, excuse me, I'm going to pause it for a minute before we jump into charts. If you guys have any questions, we could bang out a couple of questions before we go into the actual charts. Throw your questions in the chat. Throw your questions in the chat. I'm going to try to keep my eye on it so I can address the questions as we go. So yeah, if you have any questions, go ahead and put it in the chat. We'll try to bang them out. Again, I'll go through the slides and we'll pause, answer any questions that you may have. I may say, hey, let's throw that on the whiteboard. And it's not because I don't want to answer your question, but because it'll be better answered by seeing the charts. So we'll just answer it a little further into the session. The goal is for this to be 2 hours. We started a little bit late, so I owe you guys that. But at the end, I want to be respectful of everybody's time. But at the end, we'll do, if you guys are up for it, we'll do a quick 15, 20-minute Q&A session. If you have any, if you have any last minute questions that you want to ask, and hopefully I can answer it for you. So without further ado, we're going to go into the first slide. We'll get started, and I hope you guys really learned something, for real. So, okay, first slide. Okay. All right, sorry, y'all. So the first slide is the sauce. Can everybody see my screen?
Yes.
Yes.
Okay. Yeah. Thank you. Y'all let me know if you can't see anything or whatever the case may be so we can adjust it, all right? So the first slide is called the sauce, right? The sauce. Because there are 4 ingredients to make yourself a 100% trader. The name of my company is 100% Profits. I coin myself as Miss 100%. So that's my goal, to have you guys elevate yourselves to 100% traders, where you can get 100% minimum on each trade, right? So the 4 ingredients to taking that first step or to becoming that 100% trader is obviously the knowledge, right? Knowledge of the stock market, market awareness, knowing who is a part of the game, who's on the other side of my trade. I feel like if a lot of people ask themselves that question, they'll make better decisions as far as trading, who's buying from you, who's selling to you, right? And so we know that the big boys, they have the ability to move the market. So the big boys are the banks, the institutions, the funds, etc., right? So once we understand who these players are and what their purpose is, because we always talk about how we put money in the bank and that money makes money for the bank, right? So what is their purpose? How can you ask that question to make yourself a better trader? And then how do you take advantage of the answer to that question? So that's the first one. You need that knowledge, that foundation. The second one is going to be your discipline, right? Your morning routine. What is it? What's your morning routine? Do you look at pre-market movers, gainers and losers? Do you look at upgrades, downgrades? Do you read news? Do you watch CNBC? So your discipline. Do you have a systematic way of entering and exiting trades? And then do you stick to that? Are you flexible enough to, while still remaining disciplined, are you flexible enough to take what the market is giving you? You have your system set up of how you enter and exit trades. So that's going to be your second one, your discipline. Your third one, and this may be the most important, is the clarity, right? What are your goals? What are you expecting to get? I know a lot of people, when they start off trading options, they want to do $100 a day, $200 a day, and that's fine, right? So that flows into your systematic way of entering trades, depending on what your goal is. What is your why, right? Because we don't want folks to lose a couple of times and then give up, because this could put you on a path to financial freedom. So what is your why? Why are you doing what you are doing, right? So your exit plan, do you have that in the front of your mind as you enter a trade or when you're doing your due diligence? Do you have where you want to take your profit when you want to put your stop loss? Do you know how much percentage of money you want to lose or you're willing to lose? I shouldn't say want to, but how much you're willing to lose. Have that in your mind prior to even getting into the trade, right? The fourth one, highly important as well. The fourth one is going to be your trader identity, right? Are you an aggressive trader, right? Do you pull the trigger too fast? And none of these are right or wrong. It's just being honest with yourself and seeing what your trader identity is, right? So aggressive, again, are you moving a little bit too fast? If you are, that's okay, but you just have to expect or be okay with a little bit of drawdown, a little bit of pullback before the move goes in the direction that you're anticipating it to go. Are you conservative, right? Do you want to, are you conservative? Do you want to wait for confirmation? Are you waiting for something before you exit or you enter your trade? Excuse me, your confirmation, your indicators. Are you just listening to signal services? Are you just listening to the people on CNBC, the Kramers of the world? Oh, Kramer was talking about Nikola. Let me look at Nikola. Let me get into the trade. However, is that a part of your trading identity, right? Another part of that is your spending habits, and you may not think that it has anything to do with it, but it correlates. Everything correlates to each other, right? When you go out and you walking through the mall and you see something that you like, do you grab it, right? Or do you say, okay, let me hold off for 24 hours. If I still want it, I'll come back and get it. Are you one of those people, right? Do you research everything? So if are you one of those people that you going on Amazon, you looking at reviews, you doing all of that before you pull the trigger? Is that you, right? Are you a person that waits for a sale? Nah, I'm gonna come back in a week. They're gonna mark that down 20%, right? So these are things that you think about as well as far as what you're willing to pay to enter a trade. So the way you respond in the real world is the way that you're going to respond to the stock market. Okay, so keep that in mind. All right. So as far as what type of trader you are, this piggybacks right into your identity, right? Are you a scalper? Are you a day trader, right? Which means that you enter and exit trades intraday during the market, right? So are you a swing trader? Are you holding that position? Right? Are you a long-term holder where you're holding it for more than a year, right? A swinger just holds it. You could swing and only hold it for a week, 2 days, 3 days. You're just holding it. You're not entering and exiting the same day, right? So you have to figure out what your style, your personality, your preference is, right? You have to be in tune with that when you get into the market, because when you get into the market, it's dog eats dog. So keep that stuff in mind. I'm not going to harp too much on this because I know we want to get in the chart and stuff, but these things are important. Everybody has a slide, so maybe you could take a couple minutes and sit down with yourself and figure out what resonates with you, what type of trader you want to be. Okay. So as far as, again, your entries and your exits, right? For me, and I harp on this if you've heard me on Clubhouse or wherever you may have gotten to know me at, I always harp on anticipating the trade and not participating in the trade, right? If you participate in the trade, that's okay. You're just going to pay a higher premium, and that's okay. Or a higher price if you're not an options trader, because the information that I'm giving you tonight, it'll be able to translate over every market that you would like to trade in. So if you're a futures trader, the chart stuff that we'll go over tonight, it'll resonate there. If you're a Forex trader, stocks, options, whatever, you'll be able to go ahead and use this information. And it's the same on each security, each market, right? We always want to anticipate the trade. Are you getting a trade too late? So some people, they purchase something, they purchase some premium, and the stock goes up, but your premium doesn't move, right? So or a rising tide lifts all boats, right? So if you know, now that you know who's involved in the market, as far as your pension funds, your hedge funds, your banks, these institutions, right? You want them to take you where you want to go. So you want to anticipate the trade. So you get in at a lower price and they move the market, because us retail traders, we do not have the ability to move the market. So if you anticipate, all you're doing is just waiting for them to sweep you off your feet. Okay, so getting into the good stuff, candlestick basics. And again, I wanted to do this where everybody has a level playing field. So some of this may be elementary to some people, and some people actually need this. That's why it's in the slides. So candlestick basics, these are the absolute basics, right? If the candlestick is bullish, that means it closed above the open. This is across any time frame that you are looking at, 5 minute, 15, 30, 1 hour, weekly. If the close of the candlestick is above the low, or the open, excuse me, of the candlestick, then that's bullish. And it's the opposite for a bearish candle. If the close is below the open, then that is a bearish candle, right? So if the bodies tell a story, because it tells you if it's strong buying or selling within that candle. It shows aggressiveness. And that's important if you are trading, especially if you are a day trader. That is important. The short bodies are the opposite. It's almost like everybody's almost agreeing on something. Now, if you're smart, and hopefully at the end of this, you'll understand how to use those smaller bodies, those shorter bodies, to your advantage. Okay. So the shadows, aka the wicks, that just that's action that occurred past the open and past the close. Excuse me. They signify the highs and the lows of that candle period. So if you're looking at a daily chart, the wicks are showing you the highs and the lows as far as price action for the day. Same with 5 minute, 15, 30. Okay. So the shorter shadows, they indicate tighter price action. There was not a lot of bidding going on. There wasn't a lot of disagreement on price. Okay. So again, the bullish versus the bearish. I think this would be a great slide for you guys to kind of pull off to the side, especially if you're new with charting, as far as what the candles look like and what they mean. If it's a bullish type candle, how bullish is it? So if it has no wicks and the candle is just, it is what it is, absolutely no wicks, and it's a green candle, that's the most bullish that you can get. And the opposite on the bearish side of things. Okay, so this candle, I'm not going to, or this slide, excuse me, I'm not going to go too much into this slide, but this will translate. So keep this slide for your records, especially if you are new to charting. Okay, so the candlesticks, they're important. Why? Why, Shereen? Why are the candlesticks important, right? Because they're receipts. They're receipts of transactions that have already happened in the marketplace, right? Money talks, money talks, bullshit walks, right? We know that. So it's one thing for me to say, or it's one thing for you to hear, oh, this is a good investment, look at the chart, right? But then when you look at the candlesticks, the receipts don't match, right? So that's why the candlesticks are important, right? It gives you good information about the price movement. Thank you, Yay. It'll give you good information about price movement, right? And again, we want to understand what the big boys are doing. Why do we want to understand what the big boys are doing? Because they have the ability to move the market. This is their game, and we're playing in it. Okay, so that's why the candlesticks are important. Okay, so now we're going to start diving into stuff. And I don't expect you, if you guys could just hang on, look at the charts and understand what I'm saying, because when we go, or the slides, when we go into the charts, it's going to make more sense, okay? So this is getting into actually charting, all right? So we've done with the fluff now. This is the real deal. So what are we looking for as far as the charts, right? We're looking for breaches, right? Breaches, they are the force that can break through a strong wall of buyers or sellers, right? Some may think of that strong wall as support and resistance. Other people may think about it as potentially supply and demand, but we need to see those breaches. We want to see those breaches. Why? Because the breaches determine what territory we are in, whether it's a buyer's game right now or a seller's game right now. Okay? And so what we want to think about when we think about a breach is we want to think about a car, right? You're driving somewhere, right? If there's a little bit of traffic every now and again, you know, by the time you get to your final destination, you're not worried about the traffic that you had to go through to get there, right? But if it's an accident, a 5-car pileup, and police blocking off the road, fire, ambulance blocking off the road, you have to detour, you have to go around, you have to stop and move. That's different. You're going to remember that, right? So when you show up late and you like, dog, there was something going on. There was a bad accident. I had to go another way. That is what we want to think about when we think about breaches. Okay. And so also when we think about breaches, we want to think about the flow of the market, right? And we want to gauge momentum. And when I say gauge momentum, we'll go into that a little bit later, but also double back to the actual candlestick, bullish versus bearish, right? What is the shape of the candlesticks? What are the candlesticks telling you, right? If something is pulling back, why is it pulling back? Pulling back to where? The pullback is how deep compared to the initial run, at what speed, right? So all of this is a part of gauging momentum. Again, we will definitely go into this, okay? So when price swings from one area to another area, we call those thresholds. And I'll show you some thresholds when we get into the charts, right? So until a threshold is broken, right, there is no breach. There's no breach of the market. So until that threshold is broken, whatever our bias was, it remains our bias. So whether you were going long or short, until that level is taken out, we are still going to assume that it is a buyer's or a seller's market, right? And the guy that breaks the threshold or breaks the breach, that breaches the thresholds, that is called the guy who started it, AKA the big boys, which again controls the market. Okay, we'll go into that. Okay, so as far as support and resistance, right, and the difference, and why we're going to talk about a little bit about support and resistance and a little bit about breaches, supply and demand, is because there's a difference there. Support and resistance is more psychological, right? That's where people begin to get emotional, right? So we could see a pullback going into support and resistance area, and people are like, oh no, it's time for me to change my bias. So if we're on a sell and we're pulling back up to a support and resistance level, people are ready to go ahead and put their buys in. We're going to see later if that's right or not. Okay. Volume, the best indicator to gauge momentum in a stock, right? To confirm the trend. So I see y'all going crazy in the chat. I appreciate it. So again, the volume is GSW is the guy who started it. Okay. I'm going to show you what that looks like. Okay. Volume is the best indicator to gauge momentum. Okay. Because if something is breaking highs, if it's continuously making new highs on low volume, that's a red flag. That's a red flag. So when we know a move is coming, we're looking for aggression. We're looking for volume. We need those sellers or those buyers to step in. Okay. So our job as technicians reading the chart is to understand what the price is trying to do. Understand what is going on. We want to have a full market view of what's going on. Okay. And when I talk about breaches and guy who started it, it's a way to not overcomplicate things, right? So it'll all tie in. Let's go to the next slide. So buyers, okay? So to focus on a buy, we first need to see what a sellers give up their range, right? That's how we know that sellers are dead. That's how we know that we can go ahead and enter our position, high probability trade. Where are the sellers? They're nowhere to be found. Boom, okay, we're in a buy, right? So to confirm that, we want to see uptrends forming, higher highs and higher lows, right? We want to see what level the buyers step in, and again, how. If we've broken a support and resistance level, we want to break that on high volume. We don't want to break that on low volume. If it's low volume, then I'm sitting back. Personally, I'm sitting back and I'm like, okay, let me see if it breaks it, pulls back, access support and resistance. Okay, we can enter. We'll put our stop a little bit lower, and then boom, we're ready to go. Okay, so these turns happen again with the breach, right? Right? If we can get support and resistance, into a breach, that's double confirmation that we're ready to go. Okay, so again, these breaches, they determine our sentiment, whether we're buy or whether we are a sell. Okay, so I'm gonna keep going. It's the same thing for sellers on the opposite side. We can't know when the sellers are ready to really control the market until the buyers are done. Okay, so we need to know what the other party is doing. Okay, so I know a lot of y'all, you know, we cousins and stuff like that. Somebody invites you to a party, the first question we asking is what? Who all there? Because that's going to determine if I show up, right? So that same sentiment, that same idea that you have, you need to apply it to the market. You don't want to get into something on a buy side or a sell side and the other party is still there. Okay, so for the sellers, again, we want to see downtrends forming. We want to see lower lows and lower highs. How do the sellers step in? Okay. All right, let's keep it moving. Support and resistance, right? Support and resistance. So these are formed from swings, right? That place where price reverses and changes directions. That's what a swing is. And we'll point some of those out in the chart and part of the Zoom. Okay, so for an uptrend, the previous swing acts as support, and in a downtrend, the previous swing acts as resistance. Okay, so for support and resistance, we always want to do top-down analysis. We want to start on a bigger time frame. Okay, so if you are a day trader, you can start on a 1 hour, 4 hour. Draw your support and resistance lines there, and then you go down to smaller time frames to confirm it. If you are a swinger and you plan on holding it, at that point, we could look potentially at a 4 hour, a daily, right? And if this is something that you just, you know, let's just say if there's any cousins on here, let's just say if you are, this is a leap to you where you're buying 2 or 3 years out, then there's no need for you to be on a 1 hour chart. At that point, you're looking at weekly, monthly, and then you'll get your confirmation on a lower time frame. Okay. And when we're looking for confirmation, we're looking for rejection, potential chart patterns, a double top, a double bottom. Everybody knows what those are. Pin bars, dojis. Okay. That's what we're looking for to confirm what we think. Okay. So support and resistance, they act as a ceiling or a floor, which I'm sure a lot of you know that. Okay. So support and resistance are levels that, you know, price may struggle to get past or through. Okay. And so with support and resistance, there's definitely a difference between supply and demand and support and resistance, okay? So support and resistance, again, are levels, psychological levels, right? Where price may struggle to get through. Whereas supply and demand zones are zones where we have unfilled orders from the big boys ready to go. So that is the main difference. Okay, so with support and resistance, if you play it right, and which you guys will by the time we're done with this, if you play it right, you'll be able to avoid low probability setups, okay? Because we only want to take high probability trades. Okay. All right, so a supply and demand cheat code. I'm not really going to go too much into this. Of course, please read it so you know what it is and how the understanding behind what's really going on in the market. The market is an auction. For every buyer, there's a seller. Okay, so supply and demand is important. in the sense of learning how to read your charts, understanding the auction process that's going on with the big boys and how we can get in where we see fit. Okay, so supply and demands, right? That's the force that drives the price in any market. Okay, imbalance of supply and demand. So with supply and demand, these are high probability trades. If you can get supply and demand, you're trading like a big boy. It's like taking candy from a baby every time. Okay, so we got the 4 basic laws up there. Again, I'm really not going to harp too much on there. If there's a demand increase and the supply remains unchanged, there's obviously a shortage. Price goes up. If demand decreases, supply remains unchanged, that results in a surplus. Prices go down because now it's too much. It's too much. Okay, so if supply increases and demand remains unchanged, the result is a surplus and the price goes down. If supply decreases and demand remains unchanged, then there's a shortage and the price is going to go up. Okay. All right. So important concepts with supply and demand. Important concepts. All right. So again, supply and demand is what moves markets. Why? Why? Because again, there's unfilled orders from the big boys that are waiting to get filled. Okay. The reason why that's so important is because they are working with so much money that if they were to put their order in as a market order, they can either crash the market or they can rally the market like this at a drop of a dime. So they have to leverage themselves inside of trades. Okay. So if there's a market imbalance, that means there's a trend in market. Buyers got it or sellers have it. There's no balance there. If there's a balance, that means there's an agreement on price. Okay, which means we're consolidating, basing. One may want to call that a ranging market. Okay, so if we're in a demand zone, we obviously have more buyers than sellers, right? If you're buying at demand, you're pretty much buying at wholesale prices. And you're going to sell them at market prices. Okay, so if there's more buyers than sellers, there's going to be a price increase or a rally that causes the market imbalance. Okay, if it's a supply zone, this is sellers. This is sellers. There's more sellers than buyers. Now we're potentially looking at a quick sell-off. Okay, so the most important thing is that with these concepts for the supply and demand zones is we want fresh zones. So when we draw supply and demand, we want that zone. We don't want price to have revisited that zone so often that the zone is now weak or invalid. Because every time it hits that zone, again, we have big boy money orders there that are unfilled. So every time it hits that, they're filling their orders. They're using those orders as leverage to take the trade where they want the trade to go. Okay, important stuff right there. Okay, so demand zones. We got a little picture here. So first, before we even get into the actual bullet points, I just want everybody to look at the picture. And do we see how price respected that zone? It fell back in the zone, it held, the zone held, and price took right back off. So where would you enter into that trade? Where would you exit that trade? Okay, that's something to think about. We'll get into that later. Demand zones, they form in an uptrend, okay? Or it's a bullish continuation, okay? So we could be rallying, we'll have a basing period, which the basing period, we're anticipating that the demand zone will form off of that basing candle. Again, we'll get into that, okay? And so when we get into that trade, we're expecting a bullish continuation, okay? So the way that we want to draw our zones is that we want to cover the top of the body of the basing candle to the bottom of the wick. So if you see how I drew this, the start of the zone, how we had that green, so we had 3 red candles come down, we had that green candle, we had that red candle, and then we had that kind of breakout candle where it peaked above the demand zone, and then price went up from there. Okay, so notice how that entire red candle is in that demand zone. Okay, this is where we're going to enter our trades, right? So let's just say, I'll show you guys that later, but let's just say that we had a resistance level where that price hit, where it rallied up, and then that's where it turned around, AKA a swing, AKA threshold. Okay, so if we had our take profit there, we're obviously out of the trade. We don't want to trade in gray areas. Because why? Why don't we want to trade in gray areas? Because we want high probability trades. This is how you become a 100% trader. Okay, so for these demand zones, again, we want to start with top-down analysis. At a higher time frame, we want to move to a lower one. And that lower one is where we're going to the lower ones. So the higher time frames the higher time frame ones, excuse me, they are more bullish, to say. I don't even want to use that word, but they're of more importance. Okay, because those higher time frame ones, they really show where the market is going. Okay, so again, we want those fresh zones. We want fresh zones because we want higher probability trades. Supply. So again, before we get into the bullet points, I just want to, direct everybody's attention to the chart and look at the supply that I have there, right? So the supply, it worked wonderfully upon that initial sell-off, right? And then we got to a certain threshold, we went down and we kind of bottomed out and we reversed from there. And then we revisited that threshold, which some may call a double bottom, before we went back up and rallied back up into the supply zone, right? But look at price, how it doesn't really go above that supply zone, right? So this is why it's important to know what your zones are, to know what type of trader you are, okay? Because I'm not going to sit here in front and say, okay, I see that double bottom forming. I know where my supply is. I'm okay to take a counter trend position because I know where I'm getting out. It goes back up to the first couple of slides where we were talking about identity. Okay, so supply zones, they form in a downtrend, a bearish continuation. Okay, again, we want to identify that basing candle, and then we want a strong move to the downside. A strong move to the downside. What did I say earlier about breaches? I'm going to just put that out there. Okay, so we want to draw our zone from the top of the body of the basing candle to the top of the wick, in this case, okay, of the basing candle. So as you can see, we have a red candle that's kind of peaking above, and that's okay. That's okay, because we have stops in place. That's okay, right? It's peaking above, but there's no action. It's a poker. It's a faker, right? So that wick, that higher shadow, would not be visible on a higher time frame. This is why it's important for you to know your time frames and to look at these time frames. Okay, so again, these zones are where we want to take our trades, not in the gray area, because we want high probability trades. I want everybody on here to leave here saying that they're a 100% trader. Okay. All right. So as I promised, I just want to stop. And does anybody have any questions about anything that we've talked about thus far?
Yeah, this is Shari. I don't really understand the concept of support and resistance yet.
Okay.
So I can reread the deck, but if you can just do another basic example of that.
Okay, we'll get into that with the charts, support and resistance. We'll get into that.
Thank you.
Sure. Anybody else have any questions about anything we read or discussed? I know some concepts are potentially new as far as breaches and thresholds and the guy who started it. And again, these are concepts to kind of bog it down, okay? So it makes it easier for you to understand. Anybody else got any questions before we move forward into the chart?
Yeah, I'm a little, this is Shango. I'm a little bumping my head on the demand zones and supply zones. I mean, I kind of get that. I guess what's happening with the demand zone is when you're gonna start realizing that this stock is starting to get hot and is going to aim for an uptrend, and then the reverse with the supply zone. But I think I'm a little unclear fully. I not fully getting it just yet.
So what aren't you getting about the supply and demand zone? And again, we'll go into it in the actual chart, we'll go
Yeah,
into
I guess it was because that's where you were showing us, I think, how to get into a position for a demand zone or a supply zone. So that's where I got lost, is how to really clearly look at that chart and be like, okay, that's a demand zone, and I should plan to make my entrance at X number.
Okay, we'll get into that in the charts as well. I'll
Okay.
show that to you. Anybody else got any questions about anything we've gone over so far?
Something was a red flag when you were talking about volume, but I didn't catch what it was.
If we're making new highs on low volume, right? Because we're the participants. Volume shows you who's involved in the market. So if something is making higher highs, higher highs, higher highs, but out of 100 people, there's only 10 people pushing it to that higher high, how long do you think, or how much energy do you think that those 10 people have to continue to push the market higher? Does that make sense?
I heard you say that was a red flag, but I was taking a note down for something else and I missed it. So thank you for that.
No problem. No problem. Anybody else got any questions about what we've gone over so far? Okay. All right, cool. Now, before or while I'm getting the charts up, does everybody know what type of trader they are?
Yes.
Yes.
Okay. Okay. Can everybody see let's see what the chat is saying. Yes, yes. Can you be a sniper and a swing trader? Of course you could. Of course you could.
Yes, we can see your screen.
Thank you. Derek said he's still deciding. Okay, and there's nothing wrong with that. You can certainly be a sniper and a swing trader, right? You don't only have to be one. You can be both, but you have to have that end in mind as you're entering the trade. So for me, I'm a day trader, right? So if something is going my way, then that trade may turn into a swing for me. Okay. So this platform is TOS, right? And I have my SIM account up for a reason. I don't play in my SIM account, but I have it up because I did not want to bog down a whole bunch of indicators and so on and so forth. We will add indicators, but I want you guys to get it at first, okay? So this platform is TD Ameritrade, Thinkorswim. Okay. I thought about potentially doing this on TradingView, but I just felt like most people on here are somewhat familiar with Thinkorswim. So that's why I decided to do on Thinkorswim. So with this being the case, all right, I kept this up on purpose, or I'm showing you this one on purpose, because I think that this is going to be same chart that's in the spreadsheet, right? But I think I'll be able to hammer into Sango. I apologize if I mispronounce your name. I'll be able to hammer into your point and also the support and resistance question, okay? So I'm gonna take this off. I'm gonna take this off. And we're gonna start at the top. Okay. Okay. So we're looking at this chart, right? And we don't know. We're looking at this chart and we don't know anything. Let's just say that we don't know anything, right? So I'm starting over here. I'm starting at the far left, right? So we have an uptrend, a little break, an uptrend, then we have a pullback, right? So as I'm going through the chart, I'm marking these swing levels. Sorry, y'all. I'm marking these swing levels, right? So it goes here and it turns around. It turns around. Remember we talked about the traffic, right? So what about this, for me, what about this area made this price stop like this? That's the first thing that I'm thinking. Is what about the area made this stop? Okay, so it pulls back and then it goes up and it makes this high, right? So when it makes this high, again, I'm coming in here and I'm marking certain levels, right? So from there, it goes down, and it comes up right here. This is a basing candle. This is a basing candle. Now, let me simplify it before we go into the supply and demand zones, right? So price goes all the way up and it pulls back. It pulls back. Where does the pullback stop? That's the question that you ask yourself. Where does the pullback stop? Some may say it stops right here. Some may say it stops down here, right? Depending on what type of trader you are, whether you're more aggressive or conservative, that is how you're going to determine, or that's what you're going to be most comfortable with drawing your levels, okay? So let's just say we want to draw it right here because we want to be safe. Oops, sorry, y'all. Let's say we want to draw it right there because we want to be safe. Okay. So we're going to draw it right here. Okay. So once we draw that level, right, this guy right here, so I'm going to delete this. I talked about the guy who started it, right? So we got up to here and we pulled back. Which candle was strong enough to break through that level? That's what you ask yourself. Which candle had enough energy to break through my support or resistance or my thresholds, right?
Which candle first?
Say that again.
I said which candle first. So like, would that be that little small green one, or is it that long crazy green one?
So what was my question? My question is,
You said which one did it first, so it'd be that little small green one.
no, my question was, which one had enough energy to break through? So what is your answer?
Well, the way that I'm looking at it right now on that first bottom line, where the green candles first came all the way up, that little small green one with the short body and the small wick was the first one to break that first bottom line, and then it went back down, and then it came back up to that long crazy green one. But maybe I'm misreading it.
Well, okay, so we're going up, right? The price is pulling back, right? So our threshold is this red candle because this is as high as the price got, right? So this is our threshold. You following me?
Yeah, so the red one set the threshold because that's where the price pullback started.
Exactly. Now, let me stop you, okay? Because you only got half of it, okay? So once the price pulled back, right? Which candle broke that? Who am I speaking? Who's speaking?
That's Shango. It's spelled Sango, but it's Shango.
Shango. Okay, Shango. So which candle broke that red line that we have just named threshold?
That juggernaut, that long,
Thank you.
the juggernaut right there.
Exactly.
Okay.
Thank you. Thank you. So when you are, okay, so this guy that we just circled is our guy who started it. Okay, everybody get that? Y'all can unmute yourself. Does everybody get that before I move on?
Yes.
Yeah.
Yes, ma'am. Yes.
I think that's my sister Ashley in the building. What's going on, Ashley?
What's good? I made it. Look at that.
Okay, so this is our guy who started it, right? What did we say earlier about the guy who started it?
Those are the big boys that move the market.
Thank you. So these are the guys that control the market, okay? So our guy who started it, okay, he's taking it from here and he's running. He gets to a certain level and then there goes that car accident again, right? There goes that car accident again. So Shango, so now that we're going up, right? So from here to here, we're gonna call that 100%, right?
Mm-hmm.
Okay. So where we have this level drawn, this red line, this trend line right here, right? How much percentage of a pullback is that compared to the initial move up? If that initial move is 100%, how much do you say that pullback is?
About 40%.
Beautiful, beautiful. You already on your way. Okay. So we understand that the market pulls back, right? So it pulls back, right? It comes down a little bit more, right? These are just wicks though. These are just wicks. And it goes back up. So our buyer is trying to step back in. Pause. I'm going to pause myself because I want to direct your attention to the volume. So Shango,
Mm-hmm.
I'm gonna just pick on you all night now.
Okay.
I'm gonna just pick on you all night. Okay, so let's say you knew nothing, right?
I don't.
And then
Yep.
you will by the end of this call. You will. So let's just assume that you know nothing, right? And you just answered that this was about a 35% pullback. But then you're looking at the volume. What assumption are you going to make?
So I don't really know about volume, but I guess that the bar graphs below indicate volume, and it seems like there's a lot of it going on right now. I think.
Anybody else got an opinion? Somebody else hop on the mic. So if you see that volume and you know nothing else, what's the first assumption, or what are your thoughts when you see volume like that on a down candle?
It's volatile.
There's
A lot of sellers in the
people
mix.
taking profit.
Yeah, looks like a lot of sellers.
Okay, so I heard sellers, and some of y'all was talking at the same time, so I apologize, but I heard sellers coming in. I heard buyers taking profit. Okay, cool. That's okay. You're not right. You're not wrong. We don't know, right? Now, once you see this green candle start to form, and you're looking at the volume on the green candle compared to the volume on the red candle, Shango, I'm coming back to you. What are your thoughts?
Okay, so the amount of the body on a particular candle determines the volume in that particular time period.
Not necessarily.
Not necessarily.
Not necessarily. I wouldn't think of it that way.
Okay. So I don't know. I still don't know how to read this chart and determine the volume.
So you're looking at the volume at the bottom. Don't overcomplicate it.
Okay.
There's nothing here for you to figure out. All you're doing is reading the information that you see. So you see, forget the colors, forget anything, right? Forget all of that. You see that there's hella red volume, or there's hella volume, and you see that the candle or the chart has pulled back.
Mm-hmm.
There's a lot of volume on a pull back, right? And then you see a green candle form, but it's not as nearly as much volume as the initial sell that came down.
Point to the volume on the chart.
Point to the, this is the volume. Right here. Right? Ariel, yes, volume is one of the most important indicators.
So would you say that it's not enough volume to say that it's being bullish? It's still bearish?
Oh yeah, that's what you said is a red flag.
It's clicking. It's clicking.
Yeah.
Okay.
But
So now, again, so now we can go into a position, right? So this okay. So this candle, not this candle, I'm sorry, this trend line, price barely breaks above it and it comes right back down. And again, look at the volume that the price comes right back down on, right? So not only that, this threshold, it acts as support and resistance, or support and resistance, right? Because it supports this larger red candle, and then it's resisting this large red candle. And then look at the volume on this red candle. So if you can understand thresholds, breaches, guys that started it, and this will continue to go through examples. If you can understand that, then you've already put yourself on the winning team.
So I'm gonna take a stab. I'm gonna take a stab at this, at what I'm saying. Guys came in, they moved the market to get it to a good price where they could take profit. Then they sold it off, and then it dropped down, and it hit that new resistance, bounced around real quick as they tried to prop it up to get some more sell-off, and then, but it was always going to be a sell play, and then that's where you see there's a lot of red volume that's meeting that next juggernaut of a red candle going down, and so that's all the volatility or all the activity, which is primarily all the stocks being sold off.
I'm not mad at that.
Okay.
Hold on to that, because as we go further, I'm going to come back to you and I'm going to see what your opinion is. Okay. So hold on to that. I don't like to get in the mindset. Obviously, when stuff is happening in the market, if you are aware of what's going on in the market, if you are a little bit more advanced, at that point, you can say, okay, this is where people are taking profit. At that point, you can make that assumption, right? But for somebody who does not know exactly what's going on, I never say, okay, this is where prices going, people are taking profit there. And if you're going into it that way, I would advise that, or I challenge you to look at it a different way.
Got it.
Okay. So now, the guy who started, going back to it, right? The guy who started it, what did we say about that? We said that this is the guy that controls the market, right? We said that the market is intact until that guy is taken out. We said that, right? So look at this candle. And look how far this candle comes down. This candle stops here. This candle stops right here. This is a breach. That is a breach. What makes it a breach is because it took this guy out. Everybody get that?
Yes.
Okay.
Yes.
Yeah, that's clicking now. It's clicking.
Who
Yes,
said,
yes.
Yeah.
Nah, that wasn't me.
who was it, Raheem?
Nah, that was Derek. That was Derek.
Okay, all right, Derek, good. But I'm glad it's clicking. Okay? So we had that little guy that started it over here. Okay? He held the market. He was responsible for this gigantic move up. This guy came back down and took him out. Right? So now we can say, okay, well, now maybe I should start looking for some sales, right? Potentially. But as we go further along, this is why I say you have to be flexible. You have to be, okay? So this guy took this guy out. So now our threshold is right here. Price comes down and it forms this low here. It forms that low. So once it forms this low, it bounces off of this. It bounces off of this. And actually what I'm gonna do, I'm gonna wait till I start extending stuff. So it bounces off. Where does it go? Once it bounces off, it goes to this guy right here who's been here. Right? Will never let me do that. I'm sorry, y'all. I can't. When I'm on Zoom, I can never bold stuff and make it pretty. So I apologize. But y'all let me know if I need to start deleting some stuff. So it goes back up, right? And it comes up to this level here, which was our first threshold. This acts as support and resistance because this is a psychological level. Look right here at all this price movement around support and resistance. Look at all that. It's psychological. It's psychological, right? Now, remember when I said the guy who started it, which in this case is this guy right here, controls the bias of the market, right? So I'm going to add to this a little bit later, but I want you guys to understand the core concepts of what we're talking about right now. So this guy is controlling the market. So when price gets up here in this area, support and resistance, people are ready to start buying. People are ready to start buying. So they'll be like, okay, look, price just broke above support and resistance, which is this candle right here. So now they're entering into buys. Now, if you would have entered into a buy right here, what would have happened? Shango, what would have happened?
If I would have entered into a buy right there, eventually I would have lost some money. It would have bounced around, consolidating. I would have been looking at it, hoping it was going to go up, and then it would have dropped. And I would have been like, okay, I'm holding the bag for a while, see, unless I got out.
Right. So if you entered your buy here, that was a bad trade. You lost money. That's why we say support and resistance is a psychological concept. It's psychological. So we bounce around, support and resistance. We bounce around, we come back down, right? We go back up, we come back down. We're not doing anything. We're basing. We're basing. There's nothing going on here. Okay? So it comes back up, bases again, it drops back down. So let's now extend this, right? Now, look at the chart. Look at the chart. From here to here, this is a range. Everybody get that?
What does that mean?
Yes.
It's a ranging market. It's not there's no imbalance. It's a ranging market.
Like it's not going up or it's not going down?
Correct. It's bouncing between these levels. And we can see that. Look at the chart. We can see that it's bouncing between these red lines.
Right.
Hashtag don't overcomplicate the data. Okay. Yes, Kyle, consolidating. Whatever term that you want to use, basing, consolidating, ranging, thinking about it, taking a break, however you want to think about it. Okay. So now let's come back to it. Okay. So now let's look on this side of things right here. We're now on the right side of the screen. Okay, so comes back down, we retest this support resistance or this threshold down here, because this is a swing. Look how price swung down and it swung on it and it rejected and went back up. This is a swing. We never break this swing. So if you're smart, if you're intuitive, and not to say that y'all, I'm sorry, that's just how, no shade. I'm not saying that you guys aren't smart, but once you start to analyze the market in a different mindset, you start to take note that, okay, this guy never gets broken. Maybe my buyers are stepping in, right? Now, the buyers don't step in until, this is Tuesday. Buyers don't step in till Friday. That's okay. That's okay. But as you're going throughout the week, you're like, okay, this guy has not been, there's nothing going on here. Price is not going below it, right? This is where that flexibility comes in at. So with that being the case, now we start to move up, right? We got a base right here. Okay, I'm not even drawing support and supply and demand because I want y'all to get this aspect of it, and then we'll circle back. So there's a little basing candle right here, right? What qualifies this as a basing candle? I'm sure that's the question that y'all may have, right? So we dropped down, we rallied, we based, and then we rallied. Does everybody understand that? We rallied. This red candle is a basing candle. And then we went back up. Y'all can unmute yourselves. Do y'all understand that?
No.
Okay.
Is it because it was in between two rallies?
It's because it's low volume.
Volume has less to do with a basing candle than, I wouldn't put too much weight on a basing candle as far as volume. And who was that yelling no? Who?
Maya.
Maya? Okay. Okay, Maya. All right.
Define base and a base and candle.
So, all right, let's do this. Okay. So what makes this a basing candle, right? Because we're rallying up. Price does not necessarily pull back. It takes a break. You remember how I said that there are unfilled orders waiting in this area. Price is starting to pull back or pull up, go up. It's starting to rally, excuse me. It pauses. It does not pull back. It pauses. And then it rallies again. So Maya, if you go back to the concepts of the supply and demand, there's a picture there. Some would call this a rally, base, rally. Okay, I'm gonna pull up more examples that will make sense. But just to keep it moving. Price comes back. Maya, did that make a little bit more sense?
Yes.
Okay.
When you
And that
refer
red-
to rally, are you saying, in other words, increase?
That's an oversimplified way to look at it.
I'm hearing because it didn't go beyond the green candle. That's what made it the base, because it didn't drop past it again. When it pulled back, it didn't pull all the way past it. It just pulled back a little bit.
Correct. Correct. It did not come back at all. It just took a break.
And
Right?
we're talking about the little red candle in between those green candles, right?
We're talking about the little red candle. So
Okay.
if somebody is running and running and running and running and running and running, right? And he stops for a little bit.
Yeah. He going in
Would
there.
you say, so if I'm running right? If I'm running and you got your money bet on me that I'm running, right? And I just stop for 2 minutes, if that, would you say that I'm tired?
No, look like you got energy.
Thank you. Who is speaking?
That's Shango.
Shango, oh, Shango, look, you coming around, baby. Okay, look at you. Look at you. Okay, so yes, correct, right? So if something pulls back, would you say that that guy is tired?
Okay.
Okay, think about that. Think about that. Okay, so this is considered a basing candle, right? And I don't want to oversimplify and say that a basing candle wouldn't come more than halfway through a candle. So look at where that zone is drawn and how we still have about what, maybe half of the candle still peeking on the other side of it. Okay, this is a basing candle. So we rally.
Sorry, quick question. If there were two of the red candles, would that still be considered a basing candle? Like,
It could be considered a basing period. Now, me personally, I like to see that one base candle because I need to know the longer that the guy is sitting there, the more tired he can potentially be.
Yeah. Okay.
Until he decides to turn around. Does that make sense?
Yep. Thank you.
No
Hey,
problem.
Reen, can I try to maybe help out a little bit with an example?
Go ahead, brother.
All right. So consider it like a rubber band almost, right? So it has initial energy, but to propel forward further, right, you have to pull a rubber band backwards, right, for it to continue to propel into the same direction. So that's what that is. It's a resting candle. As she said, you think of a sprinter as running. I stop for a second to get water to continue my marathon or continue my sprint. Does that make sense?
Yeah.
Okay.
And just to drive home his rubber band metaphor. So the length of the candle, if it's green, you pulling it, it's gonna go in a green direction, right? So the candles to the left, you got 3 that's being pulled in that direction. Then you got that red rubber band, the basing candle, it only got a little pull, right? So that rubber band is not gonna go that far. So you're like, oh, okay, we're not really shooting back down. And then the next one goes stronger up. I don't know if that helped. Hopefully it did.
Whoever that was, and I'm sorry, y'all, because I can't really see what's going on in the chat and different things like that. Whoever that was, if we need to do a one-on-one where we could drive that home, please hit me in my DM. Okay. So, okay. So whoever's point that was, and to Dame's point, when we got that rubber band, right? Look at this momentum here. Boom. I know y'all could barely see that because I could barely see it. I apologize. But look at that run, right? So to put a number to it, it went from 35.30 all the way up to 35.60. That's a 30-point move. That's a 30-point move. You mean to tell me you can't get 100% off of that, right? If you a Forex trader, you mean to tell me you can't get 100 pips off of that? Or in this case, it will only be 30, but you could, you got your lot sizes and different things like that, but that's a different conversation. Right? Okay, so now moving on, moving a little bit further, right? So if we take this line here, because I want to bring this back. If we take this line here and we extend it, look how this line is respected, right? Now, we have the psychological level, which is the bottom candle. If y'all can see where my mouse is, we have that psychological level. And then the level above that is where we start to think about what we want to do as far as entries and exits. Okay, so I'm bringing y'all back to the left side of the screen because I want you guys to see what we're talking about, and so it can all come together. Okay, so this level, and I'm not really going to go too much into entries and exits because I want to get the chart in down. All right, so we have our psychological level, which is our support and resistance. Look how price is respecting that support and resistance. It was not until just now that I extended this out and everything was true. It confirmed what my thoughts were as we were on the left side of the page. I only drew a small line there and I just extended it, right? So if I'm actively trading, I'm drawing these lines out so I have a roadmap of what's going on, right? So now we come back to the right side of the screen. Look at this candle right here. How that candle just sits on top of that thing so nicely. That's like that. Go ahead. Who is that?
Elizabeth, can you tell us again why you started it right there at the green, the support and resistance that you're referencing? Sorry.
Why I started it? Because this is on the left side of the screen, because this is the threshold. This is where this move ended.
Okay. Alrighty.
Okay, so let's just say you don't see, all you see is Monday and Tuesday. Let's just say that. So don't even worry about the right side of the screen right now. All you see is Monday and Tuesday. As you are going along your trading journey, right? You see that price comes back. Again, we're going back to the guy who started it. We see that this is taken out at this point with this candle. But this candle stops right here. So it goes back to the question of what's happening right here. Because again, remember, big boys run the market. So if this level where you see the circle at right here before Tuesday or on Tuesday, if that level is big enough to stop the big boys' money, it's important enough for me to take notice of it. Everybody get that concept?
Yeah.
Okay, so I'm marking this level regardless. Regardless, okay? So now, again, we're back on the right side of the screen, okay? So again, this circle right here that I just drew above our supply demand zone. Look how this level is respecting where price stopped the first time. So one can say, okay, so he's respecting my space, right? Not only that, he's threatening the guy who started the move to the downside. So we're gonna erase this guy who started it because he no longer controls the market. This guy now does because he took that one out. Everybody understand that?
Mm-hmm.
Okay.
Yes.
So now with this guy, with this circle, with that guy being the guy that controls the market, coming back over to the right side of the screen, boom, look at that, right? So if you're not me, which would have entered down here, you could have entered right here, right? If you're more conservative, that's fine. Because again, right here where this new circle is at, this is a psychological level. So if you're somebody that wants more confirmation, you're probably not going to enter right there, right? But what did I say about the second level or the top level? This is where we begin to start to make our moves, okay? So price goes up and it hits our original threshold before that initial massive swing to the upside, right? It hits there and it pulls back, right? Now, if I can't really extend the circle, but let's just say I did one of these. Does this red candle, is this red candle supported? Shango, is this red candle supported?
Yeah, if you have like a zone, then that would be in your support zone.
Your terminology is changing. You doing good. Okay. So yes, right? But then look what price does after that, right? So now I'm going to come back up to this level and draw it out. Look at that. Look at that. Look at that. So again, and this is not about entries and exits, but do you see where you could enter and exit a trade?
Yep. Yep.
Is
And I see where an experienced trader would have seen kind of that early move happening, and I could see where the conservative one, if they had been drawing out their chart, would have seen that new that breakthrough and kind of new floor being set, which was that zone area that I was talking about.
Is that Shango?
That was Sean. Yeah, that's me.
All right, Alex is feeling it. Okay, right? So, yeah, who is that?
Shahia,
Oh God, what's up, Shahid?
don't you do that.
Okay.
So this red candle right here after, I'm doing it like you can see it. This on the right.
What day are you on? What day are you on?
Or maybe it's Saturday or Sunday. The large red candle. Is that a base candle still?
Are you talking about this candle right here?
Yeah, yeah.
That I would not consider that a basing candle.
Why?
Because that's a good question. Because if I were to put this like this, and I mean you could, Shahid, if knowing you probably would, but you could, but for me, I don't. Look how deep this red candle pulled back.
Mm-hmm.
Right? You remember how I said earlier that not calling this Bible, but I want to see that I essentially want to see an engulfing candle. Okay. This is not about candlesticks or candle patterns and different things like that, but I would rather see that candle engulfed. Does that make sense?
Mm-mm.
Yeah, you lost me on golf. What do you mean by engulfed?
So if something is engulfed, then something is taking over the entire thing. So okay, let's come back to everybody look at this. Oh shit. Okay. Everybody look at this area. Everybody look right here. Mm-hmm. Right?
Yeah.
Is that red candle inside the green candle? Yes or no?
Yep.
Everybody else agree?
Yes.
Yes.
Okay.
Yes.
Now look at this area right here. Is that an engulfing candle?
No.
You tried it.
Is the one next to it an engulfing candle? Or right next, the other green and then red? Or is that not enough engulfing?
You again, you could, right? You could. But for me, I want that rally. And another thing, to Shahid's point, another thing is there's no clear rally before we get that base candle.
Okay, I understand.
Right?
So do you like it to only be like a quarter of it, roughly?
I don't necessarily want to get into percentages. I understand. Is that Duncan?
No, it's Elizabeth.
I'm sorry, Elizabeth.
That's okay.
I don't necessarily want to go into percentages, so to speak, but if you could, okay, erase all of that. If you see it's going up, prices going up as it did right here. Prices going up. Damn, sorry, y'all. Let's come back. Bring it back. Sorry, y'all. Okay, so as we saw right here, right? Price goes up from here to there. That's movement. Whereas that other candle that you guys are speaking on, there's price did not go up. Right? Now, if you were to draw that candle like that, I'm not necessarily entirely mad. But for me, price went up, it based right here. It continued to go up. It pulled back, right? It didn't break anything. It didn't do anything right here.
Okay.
Right? But it, again, for the people, so if you brand new and you just want to, go home and play with charts, I'm not mad at this, right? So let's plot it out. Just plot it out. Right?
The basing candle, correct?
Say that again.
Right? That little guy, that would be a basing candle, right? Because it's in the middle of.
This is a basing candle. This is a true
But
basing
then,
candle.
but then
Now,
to the right, above that one that Shaia was talking about, that little red one in between the two green run-up candles,
Yeah.
and there's a small red one, and then four more green run-ups right after it.
It's the one I was asking about was the one he's referencing. It's like 3 away from the one you're talking about. To the right. 3 away to the right.
3 away to the right. This one right here. Oh, to the right.
To the other side.
Oh, wait, going up.
More.
This one right here.
No.
This one.
That one right there. Is that another base?
So yes, I would consider that a basing candle more than I would consider this a basing candle or this a basing zone. Now, here's the thing. Here's another thing though. If you continue to see basing candles during an uptrend, we're good to go all day. We're good to go all day. At that point, for me, if you're an options trader on here, right? Once I get that basing candle and I keep getting basing candles during an uptrend, for me all day, I'm adding to my contracts.
Okay.
Right? Now, so somebody pointed this out, right? So look. I'm sorry, y'all, hold on. So right here, boom. So let's say we draw this out as a small zone, right? So for me, right, when I enter a trade, let me just pause myself very quickly, right? So as far as entries and exits, right, I see this basing candle. So we're back to the original basing candle that I was talking about. Everybody see where I'm pointed? The candle I'm talking about?
Yes.
Yeah.
Okay. So do we see how vicious this green candle is coming outside of this red candle? Right? Once this body is taken out, that's my entry. Does that make sense to everybody?
Mm-hmm.
Right?
Yeah.
So I can enter, once I see this candle forming, I'm pressing buy. And then I'm potentially putting my stop loss down here. Right? So now let me delete this. We talk about high probability trades on the path to becoming a 3% trader, right? Let me delete this because I want y'all to really see me. So, Shango, so what risk to reward is this? Let me take this candle out. I'm gonna take this red line out, right? So if this is my stop loss and this is my take profit, what would you say is the risk to reward there?
That's your stop loss. That's at least 5 to 1.
Thank you. Right? So you might want to consider yourself an aggressive trader or whatever the case may be. Some may call this an aggressive entry because number one, I did not wait for the candle to close. Number two, this second candle pulls back before it takes off. So some may consider that aggressive. Right? but I have my stops in place. I have my demand, in place. What did I say about demand at the top during the slides? It's a high probability trade. Now, keeping it moving forward. So it goes up, it pulls back, right? Because we just deleted our psychological level, right? So it pulls back to a point where now, okay, we're beginning to start to change territories. Once we get in this area here, we're starting to change territories, right? So if I enter down here in this area, I'm loading contracts right here, right? Now, Shango, from the circle to the top where we have another threshold, what percentage is that risk to awards to you? Or what does that look like risk to award to you?
I mean, using that same kind of about candle size to measure, that's you again looking at like a 5 or 6 times from your new position.
Thank you. Shango, is this a trade that you would take?
Yeah, I mean, with yes, compared to that other trade you asked me, yeah, I'll definitely take this trade.
Okay. Everybody else, y'all can feel free to speak or put it in the chat. Is this a trade? Is this is this a trade that you would take?
Yes.
Yes.
Okay.
I mean, because if I'm understanding it right, you're at 5x off your first position to that new zone, and then now you've reloaded, and then you got to that second zone. So you had like 6x on your second contracts and like 10x or more on your first ones. And I think that if I'm correct.
So Shango, you okay? Shango, I like you, but okay, you're correct, right? But you're going too deep, and that's okay. I like that. I like that. But we don't care about. Well, I do, because if I'm in a trade, I do care about it. But
simplify it, you're saying?
Exactly.
Yeah.
Right. To simplify it, we're not going into, oh, this is a 10x, this is a 20x, this is a 50x. We don't care about that right now.
Yeah.
We want to set you guys up to be able to spot these types of opportunities and capitalize on them. Okay, so does everybody, please, everybody chime in, throw it in a chat. Do we understand what's going on?
Yeah, I have a question though on that cell, that cell that has a lot of volume there. You wouldn't pull back a little bit, a little to the right. That big.
Okay, I'm sorry. Let me move the chat so I can see what you're saying. Okay, I'm sorry. Is this Elizabeth again?
No, Sherry.
Who? I'm sorry.
Sherry.
Sherry. Okay, I'm sorry. Hey, Sherry. Nice to meet you. I'm sorry. Could you repeat what you were saying now that I have the full screen?
The stick that has a lot of volume, the cell stick. I see that we have a lot, the uptrend for the buy, but that stick that you're on
Right
there,
here?
which you see, yeah, there's a lot of volume there. So based on seeing that, you wouldn't pull back a little bit, or you're saying you'll stock up more?
No, I wouldn't. For two reasons. Number one, we deleted this line so you can't see it. Does it come back? Remember, this was our psychological line?
Mm-hmm. Yeah.
Right? Second reason is because look at this move, and I asked you guys this earlier. So from here to up here, if that is 100%, what is this pullback to you?
20% or so.
Okay. So, and okay, you not right, you're not wrong. But going back to the car accident, going back to the running, going back to the rubber band man, would you say that this guy is tired?
Yeah, I just took a little break.
Okay. Right?
Got it.
And then look how far, so here goes a little hack, right? So if I take this initial move, duplicate it, and then I put it to where this guy started, look where this candle got.
Yeah. Okay.
Did everybody understand what I just did?
Not really. Can you do that again, please?
Okay. Y'all keep it real, because again, I want y'all to come out of this as better chart readers. Okay, that's how I'm measuring my success. So I'm going to delete this, right? So we got as far down. I'm going to take this all the way. Matter of fact, let me just clear all of this out. Let me take this off. I'll keep this on, right? So let me get this out of the way too. Okay, so we have where the candle stopped, right? The body of the candle. Y'all look where I'm drawing it from, all the way to your left side of the screen. This is a body of a candle right here. We're going to stretch it all the way across, right? Look how this candle just bounces off of that beautifully, perfectly. Yes, Elizabeth. Look how this bounces. You got to give me some time, but yes, everybody will get it. Look how this candle, this green candle, bounces off of this perfectly. Perfectly. It don't get no better than that, right? So now, once I see that this is my this is my push up. This is my push up. That red line is my floor. So I'm starting at my floor and I'm measuring the move that this runner made. Everybody keeping up with me so far?
Yes.
Okay.
Yeah.
Now, all I'm going to do, right? So let's say that this stuff did not exist and you don't know what you're doing. Nobody on here knows what they're doing, including myself, right? Let's say we didn't know anything about charting, anything, technical analysis, so on and so forth. Y'all going so deep into this, we ain't even got time to use indicators, but that's good because we didn't need one. We done made 3% and we done put one indicator on the chart. Just pointing that out. So now we're gonna duplicate this move, right? We see where he pulled back to. He rejected this area. So now we're gonna go from the low of that area and just simply draw. We're gonna move the line to the low of that area, right? So now that I've done that, I'm gonna do this, right? And all I'm doing is marking where that line stops. So if I knew nothing else, I'm expecting to take profit right here because this is the same type of move that this previous guy made. It's the same exact distance. Everybody unmute themselves. Do you guys understand that?
Yes.
Yes.
Yes, ma'am.
Yes.
Yes.
Yes, ma'am.
Yes.
Now, seriously, if you don't, please tell me.
No, that made perfect sense.
Lola in the building. What's up?
My mind is blown over here. I'm like,
Me, the
wow.
only thing is, like, we looking at this after, after the race has already been run, so we could kind of see it. But like, if like, say you made your entry point down at that first, the first, I forgot what that, the base candle, engulfed red candle is. You made your entry point because you're seeing the play develop. Would you look at like where you set that next red line as where you would set your price target and then your stop losses, just because, let's say it hadn't ran all the way up there, but you're using what you've already seen to determine your exit strategy?
Yes, because now, mind you, we already had this top line drawn. So this would have been our take profit right here, which it matched up beautifully
with what's happening.
Right? So again, now we drew that price. So we drew that not even looking at this side of the chart.
Right.
Right? But again, if you are not cognizant enough, let's use that word, to have done that, then again, you could simply measure the move that was the initial takeoff. So when you rev the car up, if you got that horsepower behind you, right? So this is where this guy got revved off at, and then he just went 0 to 60 in 2.5, right? So all I'm doing is I'm like, damn, well, if he has the horsepower enough to do that, and he done pulled back and took a break, then maybe he could do it again. Right? So again, all I did was duplicate this. I didn't think about nothing. I didn't look at nothing. I didn't know nothing. All I did was measure the initial move, and then I waited until it pulled back, and I copied it based off of the point where it pulled back, the lowest point of where it pulled back from. And then all I did was draw the line from there. So some people, if you don't know everything that's going on, you would have took profit in this red circle, right? But for the people that want to set it and forget it, or if you want to put in your limit orders for your take profit, if you have a 9 to 5 and you can't stay in front of the screen, you would have had your take profit set right here, and you would have hit it all day. And within the same candle at that. Everybody unmute themselves. Does that make sense? Throw it in the chat.
Yes.
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 Yep.
Yes.
Yeah.
Hey, Reen, I got a question for you.
Yeah.
So you see on the first, after we bounce off of that first green candle all the way, where you have that little circle there. Are you at all concerned that momentum up may not be sustained because it looks like the buying volume doesn't look all that great?
Okay, so good question. Is that Eldon?
Yes.
Good question, right? So for me, knowing what I know, I already know that Fridays are low volume days, right? But I'm trusting in my craft. I'm trusting in my knowledge, right? So for me, when it bounces off of that, and then there's a little indecision, and it continues to go, for me, I'm like, okay, this is starting to, my hands are rubbing, Birdman hand rub at this point.
I'm sorry.
It's okay. It's okay. Right? So am I concerned? The answer is not really, right? Again, if you're intuitive, let's look back at this, and y'all probably barely gonna be able to see this, but let's look back right here. Let me see if I can turn this around. Okay, well, I'll just move it here. Right? Look at that volume. And this is on an upward candle. So again, if you are intuitive, if you understand what the big boys are doing, in your mind, you're like, okay, they're leveraging positions. They want to get in at a better price. I already see that they're ready to go. I already know what they're looking at because I have levels drawn out on my chart, right? So now your intuitive is starting to kick in, that intuition, right? So, okay, maybe they're not ready to make the move right now. We peak above, we come back, sellers take control for a couple of candles, right? So during this process right here, because you remember how I said for every buy, there has to be a sell. Remember that initial question of who is buying from you, who is selling to you, right? So for this candle right here, this is where the big boys are leveraging into their positions. They are absorbing all of the orders to the sell side because, again, remember our psychological level. People are thinking, oh, this broke through right here. It's time to go in for a sell. They take that sell and they get clapped because he's leveraged in, he holds right here. Boom, it just goes. It just goes from there. You got that beautiful beginning to, or that partial Elliott wave. You got that zigzag. You got that move up. You got that little break, which I can't remember who it was. Sherry, I think it was. I apologize if I mispronounced. But like she said, 20%, boom, he takes off. And not only does he, first of all, he goes further than what he did the first time.
Mm-hmm.
All right, so y'all, give me what y'all got. Do y'all understand what we're saying here? Do you guys feel like you can take what you just saw and apply it to different charts? Everybody unmute or throw it in the chat, yes or no?
Yes.
Yeah.
Yes.
Yes.
So on the flip side of the green big boys who are leveraging their position and absorbing everything that's being sold, who are the large red big boys? That's just another they had a position and now they're deciding to sell off.
So not necessarily, because again, you have retail traders now stepping in, right? Because it hits that psychological level and they think that, oh, okay, this is going to go this way or this is going to go this way.
Right.
And that's not the case.
Gotcha.
Okay. So we got about 10 minutes. I promise y'all that we'll do a quick Q&A. But what I want to do, you got to throw it in the chat because I want to see, or you could come off mute. What chart do y'all want me to go over real quick? Pick a chart that you're trading. What chart is that?
Pull up that Best Buy.
NVIDIA. Oh,
I hear
yes.
Best Buy. I hear NVIDIA.
XLY.
XLY.
Best Buy.
I had a really basic question.
Okay, so while I get this question, y'all please throw it in the chat. We're going to pick 1 or 2. Y'all throw it in the chat what y'all want to go over.
How many days do we look back? What should our period be? Always 7 days when we do all these to find our base? Is that normally what you do?
I don't go back. That's a very good question. I don't necessarily go back a certain amount of days, right? But again, I'm drawing my levels on higher time frames, and I apologize, y'all, because y'all had some good questions while we were going over things, so I couldn't get as far as I wanted to go. But I start on higher time frames. It's not necessarily how far I go back. Let me explain why, right? Who is this, Elizabeth?
It is.
Okay, no problem, Elizabeth. So if I'm a day trader, or no, let me say it this way. If you are a day trader, do you care what happened 3 days ago?
Nope.
Do you care what happened a week ago?
No.
Right? So all of that matters. All of that matters. But those zones could be, as long as they're fresh. Now, the zone could have been created a month ago. To your point, Elizabeth, the zone could have been created a month ago. But unfilled orders are still waiting there. We have to respect those zones. We don't care how long they've been there. We expect price to react. This is how you anticipate in something and not participate in something. Does that answer your question, Elizabeth?
Yes, it does. Thank you.
No problem.
And then I think I had another basic question. The volume at the bottom, that's based on number of people and not dollar amount?
Correct.
Okay, all right.
Reen, which other indicator would you add to the chart that might be helpful?
Great question. Who was that?
Mimi.
Hey, Mimi. Great question. All right, y'all. I'm getting ready to pick I see 5 for okay. That was a good question, Elizabeth. Okay, indicators. So let's do something fun here. Let's do something fun.
We need more time.
I know I don't want to disrespect anybody. I know folk got work in the morning, different things like that. So all right, let's do this. Who asked? Mimi. Mimi asked. Okay. Okay, and let's do this.
What is that? Moving average.
Damn it, Shahia.
I was sorry.
Let's do this. Okay. Now, okay, before I even do that, right? So the moving averages that you use are going to be aligned with your trader identity, okay? So if you are a day trader, then you can use a 5, a 8, a 13, right? If you are a swing trader, then you can use a 20, 100. If you hold it long, you can use that too, right? So I'm gonna come in here, I'm gonna edit, I'm gonna move this down to 5, hit okay. I'm gonna put this on 21. I don't even want to go into why I put these numbers up here because I know y'all gonna have a lot of questions about that. But okay, let me change the color as well. All right, let's change this to, let's do purple. Okay. All right, and then let's change this to, let's say yellow. Okay, apply. Okay. Who asked that question? It was Mimi, right?
Yes.
Okay, Mimi. So I'm taking all of this stuff off the chart, right? I'm just gonna take all this crap off. I'm gonna leave certain things just so I'm making the point. Let's take this off. Let's take this off. Okay. Do y'all see the moving averages that I just put on the chart?
Yes.
Yes.
Everybody can see it? Okay. Mimi, if I knew nothing else, think about the levels that I just took off the chart, right? If I knew nothing else, I can enter a trade when these moving averages cross.
Yes. See, now I can clearly see that. The moving averages work better for me.
And that's okay. That's okay. The point that I'm trying to make to everybody that's on here is that you don't need it. If you want to use it as confirmation, fine. But the price action and the volume tell the whole entire lifetime movie that you need to know.
Got it.
So the moving averages are almost like subtitles as you trying to watch the movie.
I like that.
Right? So now again, but to that point, Mimi, right? So I said that I was entering right here. Look where the moving averages cross. So you're not far behind me. I just got in a little earlier and maybe at a better price potentially, but the numbers are still there and they're still going to add up if I know nothing else, right? But again, you have to have a little bit of intuition, right? Because let's move over here. The moving averages cross on the downside right here.
That would be put level, right?
Say that again.
That would be put level, right?
This would be where you could take a put, correct, right? Now again, we have our levels drawn out. I'm gonna direct your attention right back here. This is where you would exit that put. Right? So if you're taking a put to the downside because you got your moving averages to cross, you've already set up your levels. I'm going to call them levels. You've already set that up. So you already know if you do that, then the questions that were posed in the slide have already been answered as far as knowing your exit before you get into something. So you know that, okay, my moving averages just crossed. Okay, cool. I got my levels put out. Okay, this is where I'm going to exit the trade. So to put numbers to it, this goes from, let's say 35.54 to 35.13. That's over 30 points. How much percentage do you think that would equate to if you put a put on this? 30-point move to the downside? Crazy. Crazy.
Very helpful. Thank you so much.
No problem. No problem. I'm going to ask this question, guys. I wanted to kind of do a Q&A, which we've kind of been doing throughout the entire thing. It's about 10 o'clock where I said I was going to end it. Do y'all want to go over some of the charts that y'all put up in the chat, or do we want to call it a night?
Yes, ma'am.
Go over.
I'm still here.
Yeah, let's still go over it. I had
Yes,
a
I'm ready.
question too.
Come on, peasants are team no sleep. Team no sleep for 3-year walk away.
Yes, ma'am. I love. Who was that? Elizabeth?
Right.
Yes.
Okay. All right. Y'all saying keep going. Somebody peeked in and said that they had a question. Who was that?
It's Courtney. Hi.
Courtney.
I had a question about drawing the zones. So if you're day trading futures, would you draw the zones on the 4-hour, or
What type of?
go ahead, I'm sorry.
No. If you're day trade, yes. You would draw zones. You're drawing. So again, we're doing top-down analysis. You're drawing zones where you see them on the time frame that you see them, right? And then you're just going to lower confirmation to confirm. So if I see, let's just say for pretend, okay, so let's say for pretend that this is a 4-hour supply, right? And look at the chart that I'm on. I'm on a 1-hour, right? And Courtney, to your point, this is a futures chart.
Right.
Okay, so let's say I'm on a 4-hour supply and I have that zone marked, but I'm trading on a 1-hour or 15 or whatever the case may be. Again, I know where I need to exit that trade because there's a higher time frame zone here waiting. And we don't, now when we go back to the 4-hour, we'll see what kind of zone that is, whether it's supply or demand, but we know that that's where the sentiment is, that it's either going to be up or down, buy or sell, right? So if, let's just say that this was, okay, so in this case, we're going to say it's a supply zone, right? So we know supply is when we're getting ready to sell. So if I'm taking this trade and I done got in way down here and I wrote it up, I'm exiting that trade as it hits the higher time frame supply.
Okay.
Does that make sense?
Yeah, that makes sense. Thank you.
So I'm basing my chart, like I'm basing where I'm trading at based on the chart that I'm looking at. So if I want to do a month, I'm cutting that in half. I'm looking at a 20-day or 15-day. I'm doing my chart based on that. And then I'm doubling back to my 30-day to make sure that I'm good.
Okay. Who was that?
Raheem.
I thought it was. Okay. Say that again for me, bro.
All right. So you see how you said this is the 4-hour mark, but she gonna use the 1-hour chart to make a decision as to where she gonna get in and where she gonna get out, and then she doubling back to the 4-hour. Is that basically like the route that I'm taking when I'm charting everything out? So no matter how far I'm going, I need the long and the short. You get what I'm saying?
So, okay. Elizabeth going crazy. I support. So Raheem, not necessarily, you don't need to, so if you start at the higher time frame, right? You don't necessarily need to revisit that because it is what it is. You already then set your zones, you set your levels, right? So all you're doing is if you're on a lower time frame and you see that price is approaching a level that you have on a higher time frame, it's almost like they got more clout, they got more money, they got more, you know, je ne sais quoi, whatever you want to call it. So if that's a supply, right, on a 4-hour time frame, but I'm on a 15-minute chart, then I know that I need to start getting ready to exit. There's no reason for me to go back to a 4-hour chart.
Right, but the line was drawn based on the 4-hour.
Correct. And it will
Okay.
remain that way. It will
I
remain.
got you. I
But
got you.
there's no need to go back to the 4-hour chart. Because again, you're wherever you see these levels, and it's the same principle. We're gonna get ready to go on some of the charts that y'all put up. But it's the same principle. You're gonna start at, if you are a day trader, and this is in the slides, you really shouldn't be above anything over a 4-hour. Well, you need to go and look and see what's going on, because if price goes up to these levels and you're sitting there driving blind and you thinking price is going to continue to rally, but lo and behold, there's there's a higher time frame supply, then, and you sitting up here running in the wind like your shit don't stink and that it's not going to stop. You just ran into a higher time frame supply. No wonder why your stuff is pulling back.
I got you. I understand.
Okay.
I had a quick question. This is Duncan.
What up, Duncan?
When so like the trader I was before 2 hours ago was not always making the best ins and outs. So like we talked before, like, oh, I was having trouble getting into this trade or I couldn't get out. What does that look like on the chart? Or is that something you can see?
Say that again, Duncan. Say it another way, please.
Like it was that SPY call, even like when you didn't get all of them executed the way you want to. Is that something you see on the chart, or is that more a matter of volume?
That's a pivot. Okay? Because that just means within the so now we're going into volume and open interest on the actual options chain and not the chart.
Okay. That makes sense.
Because the chart is what it is, right? I knew that it was getting ready to make a move, but I just did not have that interest on the option side of things for somebody to buy my contract as cheap as I wanted to get in.
Right. So when you decide how long you're going to make a call for, is that a chart thing or is that like a company knowledge thing?
You mean whether I'm going to swing it or not?
Like if you're going to make a play for the end of January versus 2022 versus 2023, is that based on what the chart is telling you? Or is that more of what you think is just going to happen in the market and with that particular company?
Both.
Okay.
Because, so let's just say, so let me draw these lines back. Damn it. Let me draw these lines back, right? So one could say, Duncan, you asked some good questions that's making me go way further than the chart that I wanted to, but that's okay. That's okay, sis. So
thank you.
Let's say, so look at so this is 9 bars, right? That went 51 points. Does everybody see that?
Mm-hmm.
Right?
Yeah.
So this did this in one day, right? So I'm going to draw that. And again, I'm going to duplicate it. And I'm going to put that at where this pulled back at, right? So now, Duncan, the question that I ask myself is how much time do I think it's going to take to get there?
Right.
That determines what strike I want to be at, or what expiration, excuse me. Well, both, but what expiration?
And if you're bullish and like kind of want to see what could happen, that might be where you want to make a play for January and 2022.
You could certainly lay your position.
Right, just with different numbers.
You could certainly do that.
Okay.
You could certainly. So if you so damn it, Duncan. So let's just say
Sorry.
No, it's okay. Let's just say that, because that's a very good question. So let's say I'm layering in the way that you said, right?
Right.
So for me, right, that initial move, so if I'm right here, this is okay. So this is a real life example. Okay, fuck it. Let's do it. Okay. So if price is right here, which is it's at 35.18. Let's just say it's 35.18. And I have my level at 35.60, right?
Mm-hmm.
For me, that initial trade that I take, so when I enter right here, I'm buying further out the money.
Right.
So I may buy a 35.60. I might buy a 35.70. Hell, I might even buy a 3600 because I know the percentages are going to run. Now, once I double in, now let's say I'm trying to buy further out, like a 2022. At that point, I'm not going so far out. I'm bringing it in because I know my percentages are going to be there.
Okay. Okay.
So that 2022, if I'm right here, and then price gets up here, price gets in this area, right here. And this is where I start to think about re-entering another position. My strike might be 35.80.
Okay.
Right? So
Yep.
now from here to here, so once it hits 35.80, this is not exactly 35.80. Let's put it right there. So once it hits 35.80 on that 2022, I'm already in the money.
Right.
And it goes all the way up to 3600.
Right.
So for the option traders out there, y'all can imagine what those percentages would look like.
Mm-hmm. Thank you.
No problem. No problem. Okay, so let me go through the chat. If anybody got anything they want to say real quick, let me just go through the chat and see what everybody put up there. I got a Home Depot, Best Buy, Fastly. Who else? XLE, ARKF. NIO. Okay. Somebody else said XLY. Okay. So here's the thing, because there's a lot of good stuff up here. XLY. Y'all love that fucking XLY. Okay. I see Fastly. I see Fastly, NIO, XLY, Best Buy. Yeah, can you know what?
What's up?
Okay, because I was getting ready to somebody sent me something private that was hilarious. Okay. So what did I just say? I said NIO, XLY, Fastly, and Best Buy.
Yes.
Okay, can you keep me honest with that?
Yeah.
Okay.
Somebody said you need snow from last week. We don't want to be hurt.
So here's the thing, y'all. I know you are. I know you are. And we're gonna go through that first. Here's the thing, because it's a lot of things that y'all want to see. Again, I want to be respectful of y'all time. So I'm going to kind of go through things rather quickly. I'm still going to make it concise. Y'all, if y'all got questions, throw them in the chat or don't be afraid to just hop out, okay? So the first one we'll go through is Home Depot. All right. Shango, you still on?
I'm here.
What do you see?
See a downtrend. That's for sure. A lot of volume volatility. Looking for some.
So you saying that we in a sell territory?
I would say, yeah, I say it looks like, okay. I'm trying to draw the lines on the screen. So found the first one, then the second one is here. Then it looks like it broke down. Yeah, I think we Okay, now we got this little uptick though. So I think the last green bar is gonna try to establish the new bottom, but I'm not 100% sure.
Okay. Anybody else want to take a stab at it? Elizabeth, Duncan? Anybody else?
Yeah, we at like the support level, like because right at this 268, I want to say, it keep running back and forth to that, and it looked like it's about to take back off to that 277 based on the amount of volume that was green at the last joint.
Okay. So let's get into it. Okay, so I wish I could black out the screen so I could ask y'all some stuff. Okay. Do y'all see, okay, Shango, where do you see the first basin candle, or do you see a basin candle?
First basin candle. I feel like it's a reverse basin candle.
Not
Like
the reverse basin candle.
it's the little green one in between that red rundown, but all the way to the left.
Okay, what day are you in? Tell me what day you're in.
I am on Monday.
Okay, save that. Elizabeth, where's the first basin candle that you see?
I'm looking, but is it 286 on the first Monday? Somewhere around there? Or
Somebody
I'm too far back?
Tuesday.
Richard said Tuesday.
Okay.
I say Tuesday too.
Yeah, Tuesday.
Everybody's seeing Tuesday?
I think Tuesday.
Tuesday, Friday. Okay, okay. So how many people got it right?
That's the one I said.
I know, Shango. That's why I told you to hold, or Shango, I'm sorry. That's why I told you to hold your thought. Who else got this right?
I did.
I did.
Okay. Right? So for the people that got it wrong, do you see where you got it wrong? Or why this is what it is, right? So if we know nothing else, right? Price peaks up, and I'm trying to throw different things out here so y'all can get it. Again, y'all have the recording so y'all can go back. Price peaks up right here, right? This is a different session, but you wouldn't be able to necessarily see this on a higher time frame, right? Keep that in mind, right? So we got all these little peaks above, but price comes right back down, right? So this area right here, if I can draw it, this area right here is the gray space that I was saying where we don't enter trades. If you don't know what you're doing, you're not entering trades right here. Now, once we come over here, this is where we enter. Does everybody see that? We're going to go ahead and mark it up, but I just want everybody to understand what's going on so far. Does everybody see that?
Mm-hmm.
Okay, cool. Right? Okay, so let's get rid of this, because now we're going to go back into thresholds and blah, blah, blah. I'm going to delete this. I'm giving y'all the cheat code right now.
So it can only be a basing candle in the zone, right? Is that like too simplified of a way of saying it?
It can only be a basing candle, and the basing candle creates the zone.
Okay. Okay, that makes sense. Okay, because like at first and I see why I was wrong, but my first answer was, okay, that little red candle on Tuesday is the one, but because even though technically it like it appears to be a basing candle because it's not in the right area, it's not. Right? Or am I overthinking it?
A basing candle could be either green or red.
Who said that?
Chongo.
You are you
The
not
Gold Star student.
you really are. You done came from A to, we're gonna put you probably at elemental P, but you have made progress on this call today. Okay. I am proud of you. Truly, I'm proud of you. Yes, Shango, yes. The basing candle does not necessarily have to be red or green. It does not necessarily have to be in that direction of what you're anticipating the market to go. So let me bring it back, okay? So y'all remember when I said I like to see a rally, I like to see a base.
That's just rallying down, though. It's still a base.
I'm sorry, it's not a rally. No. I'm sorry. Is that Shahia? Thank you. This is not a rally. I'm sorry. So we see a sell-off. We see a drop. We see a base, and then we see another drop. Now, for the people that thought that this was the base and candle, where's the rally? Now, if you want to say, okay, price made it all the way down here and it rallied up, if you want to say that, okay, cool. So let's I don't even want to do that. I'll do that later because we're going to go through multiple charts. So I'll do that later. Okay. So do you guys understand why this is our base and candle? Okay. Yes. So now I'm going to simplify it, right? I'm going to simplify it. And again, to Mimi's point, look where these candles crossed. Right? Okay. So now, or the moving averages, excuse me. So, okay, here goes a cheat code. If you guys can understand this, you are ahead of the game. Okay? So, when this Shango, when this candle comes down, when this move starts, this move here, so this is a high. When this move starts, where does it start to take its break?
When that move starts, where does it start to take its break? Is the answer in that one candle or is it in that section?
You tell me, because I don't know.
And I would say that it's still in that the base and candle because it dropped, and then took a little breather, pretended like it might do something else, and it was like, nah, I'm gonna continue to go further down.
Hold that thought. Anybody else got an input?
Is it at the 282 roughly, where the other wick meets it? The wick right next to it?
So you talking about this candle?
Yes.
Okay. Anybody else?
Okay. Was green candle.
So this,
when does it take a break, right, Ree?
I'm sorry, say again.
The question is, when is it taking a break, or when did it take a break, right?
Y'all remember when I brought up thresholds earlier, where the movement stops, right? Now, when I say stop, right? Because we can stop, take a break, or we could stop and pull back, okay? So I don't want y'all to get that confused. So where does the movement stop? Right? I'm going to answer the question. It stops right here. It stops right here. Right? Now, not only does the movement stop right there, as we pointed out earlier, this is our base. This is our base. So I brought up thresholds because if you could understand where those are, then you have already understood where a basing candle or where the demand zones form. I didn't do anything different. Okay, I didn't do anything different because the bottom of that zone is the same place where that threshold is, where price stopped. Okay, so moving forward, we have our supply zone. This we're going to label our supply zone. So just to not get it confused and just for the replay factor. Who is that? No? Okay. Right? So that's our supply zone, right? So it breaks here, right? Who is the guy who started it? Why is the guy who started it important? Because it holds the market, right? So if you knew nothing else about supply and demand zones, if you know what the threshold is, if you know what the guy who started it is, you know where your zones are because this is the guy who started it. Shango, why is that the guy who started it?
Because he was able to stop the fall, and that's moving the market.
Answer the question again for me, please. Why is this circle the guy who started it?
Because it's the one that started to move the market or move the price back into the purchase zone or into the green.
Shahir, okay, Shango. Shahir, why is this the guy who started it?
You're talking about right here where the oval is, right?
I'm talking about where my circle, where I just drew that circle, right here, right there. Why is this the guy who started it?
Because that's where it hit the resistance.
Elizabeth, why is this the guy who started it?
Is it the basic? Because that's where the candles engulfed by the prior day.
Donye, why is this the guy who started it?
Is it because he broke the zone?
Who is that? Who is that?
Kenyatta.
Oh my God, Kenyatta, thank you. Thank you. Thank you. So let's imagine that this zone, I'm gonna take this zone off. Right? This is the guy who started it because it broke below the threshold. Remember I said that earlier. Right? So this guy, sorry, let me see what's going on. I see people. I'm sorry, I'm sorry, Courtney, if you said that. I'm sorry, Courtney, if that was you that said that. But Kenyatta, yes, right? So let me take this off, right? So this is our threshold. The guy who started it is the person or the candle that breaks through the threshold. It has enough energy. It has enough momentum. It's ready to go. It broke the low. So this guy here broke below the red candle. Does that make sense to everybody?
I'm sorry, which guy, the green guy or the red guy?
The red guy. The red guy.
Okay.
So let me tighten it up.
I see it. Yeah, I see it now.
Okay. So let me draw it up here. Okay. And again, this doesn't have to be exact, right? But yes, Shango, this is the guy who started it. This red candle right here, right? But again, what did I say? If you know where the threshold is, and if you can identify the candle that broke the threshold, then you already know where your zones are. All you have to do is draw them out.
And the important thing is that it followed, the next candle followed that trend, right? That's what makes
Correct.
that okay.
Correct, right? So if I draw my wick, right? Remember how I said how to draw the candles or the zones, excuse me. You cover the top of the wick. So if I cover the top of the wick and I just drag it out, let me bring your attention to this guy over here, how he respected the hell out of that. Does everybody see that? Does everybody understand that?
Yes.
Okay, so now I'm gonna pick it up a little bit because we want to go through other charts and I don't want us to be here all night. So picking it up. So he breaks here. Where does he get to? He gets to right here, right? This is where he gets. Look how this acts as support and resistance. And that's why I wanted to introduce both concepts to you guys and how you could use that together to become a better technician, right? So we mark off this level. Now, without knowing anything that happened past Friday, right? We know that this is as low as it got. We see it. We see it. That's as low as the candle got, right? So now we mark that level. So moving forward, right? So now we came down, we rallied, right? So if you get good at what you're doing, right? So you got one trade right here, boom to boom. You see it rejecting. You potentially have another trade back up to demand zone. You're going to chill because it broke above. We don't know what's going on right now, right? So we're chilling. We're not trades in that gray area. It came down. We're still chilling because it did not, it did break it, but look at it. If you would have taken this down, you would have had to deal with this drawdown, and that's okay. But if you're a day trader, that's not okay. If you are a swinger, then you can deal with this, right? So it comes down, it goes back up into the supply zone, and what does it do? It rejects the supply zone every time. We just don't have enough momentum to get it to come down like this initial guy did. So it goes back up, and then now there's a gap down, which is a whole different thing, but there's a gap down, but it respects level to level, right? It goes back up, it's in between zones. We're not fucking with it. It comes back down, it doesn't do anything, right? So fast forward, it finally goes back up. So anytime price is in these zones, we could take price down. Now, again, right here, right? If you are a technician, and so for the people, oh no, because y'all said Friday. Okay, so once you get better at reading candles, right? You would have jotted this as a level potentially. And let me just move that to right here, right? You would have drawn that as a level. So if you took the trade down and you see that it does not come past this level, then at that point, your red flag should go up. It comes back into the zone, right? So now remember, we got these unfilled big orders here. These are where our big boys are hiding out. It comes back into the zone, boom, it drops. And what day is this? This is Tuesday. So shit, it looked like every Tuesday she going zone to zone. For our day traders out there, that might be something that we could look at. Because Tuesday it went up, Tuesday it came down, Tuesday it came down. So, okay, now coming back over to the other side, right? It came down, boom. Now, this is where we start to get more advanced. This is where we start to get it more advanced. Shango, this level is now broken. The level that we drew earlier.
Yep.
Right? You follow me?
Yep.
Okay. So now moving to the right side of the screen, who is the guy that started it?
Moving to the right side of the screen.
So look where my mouse is. So from this point to the right.
Yeah.
Who is the guy that started it?
I'm gonna say it's over Thursday. Thursday, you're right.
I'm about to start crying because I'm so proud of you. Yes.
That little mini green run up. That candle right there.
No. Where's my circle? What
Yeah.
this can't that can't be the guy who started it. Because
that red one that the circle that the oval's on, that's not the guy who started it.
That is the guy who started. Did you say the green candles?
No, I said the red one.
Okay. My bad. I'm sorry. Apologies. You're correct. Right? So now, what did we say about the guy who started it? They control the market, right?
Yep.
So right now, this is sell territory all day.
Yeah.
We're not looking to get into buys. If we, for the sake of this session, we're not looking to get into buys. If you are a counter trend trader and that's a part of your identity, and this starts to rally or you start to see momentum picking up, you're looking to exit when this gets to this level. You're looking to exit. Okay, so bringing up Mimi's point, look at where the moving averages crossed if you know nothing else. Okay, but again, I don't want you guys to depend on moving averages, because we did all of this just based off of price and volume. Right? So with this being the case, you're starting to see it peak up a little bit, and that's okay. So now we're looking at momentum. We're looking at how it starts to pull back to the buy side, right? Until this guy is taken out, we are not looking for buys here. This guy here needs to be taken out. Once we get to 272, then we could start looking for buys here, right? But then we also got to keep in mind that we have a level above 278. Now, again, that's keeping it very simple for this conversation, right? But for somebody like me, I may potentially look to see how this candle opens, look at momentum, see what's going on. I may enter down here if I see a setup that I like, but I'm more advanced. And if I see that setup, I'm looking to scale my position, or I'm looking to see how price reacts around this level to see if I'm going to add to my position, take profit, or scale it and let one run. Okay, so let's move on to Neo. Neo been acting like a whole damn fool lately. All right. Okay. So who wants to take a stab at what they see on the chart? Nobody? Okay.
Starting from the left.
Tell me what you see.
No, I'm not telling you. I'm just looking. Please hold.
Lola, repeat that, or that last part you said?
Oh, I was like, please hold. I'm just looking.
Okay.
Okay.
The basin candle on Friday.
How are y'all seeing these names today?
Okay. Somebody said a basin candle on Friday. Okay. So I'm going to assume that this is what whoever said, I'm sorry, whoever that was, but I'm going to assume this is what you were talking about.
Yes.
Okay. Lola, what you see?
I can't see the names of the days, but I see. Oh, wait. Okay, so I was looking too far left. Okay, yeah, I also see this candle, that level there. I guess that was Friday. I see the next one on, are we counting Saturday, Sunday, or is that Monday?
Lola, I could barely hear you. I heard Monday.
Oh, I'm sorry. I didn't realize you can't hear me. I can't see the days, so I'm like trying to figure out which day is which day. Hold on. To explain it to you what I'm seeing. Don't worry, I'm gonna just pull up my chart.
Okay. So while Lola's doing that, because I'm not going to go into too much, I'm going to let her, because I want this to be a learning experience for everybody that's on the chart. Okay, so who thinks they know what's going on with this chart? Besides whoever said that it was at Friday. Nobody? Okay, so let's do it. Let's do it. Okay, the first level that I'm drawing is this level right here. So I'm going to draw everything and y'all tell me why I drew it there, because if you can tell me why, then you have an understanding, okay? So I'm drawing that there. I'm drawing this here. Okay? So for the people that said that, let me do this. For the people that said that this was a basing candle, and I want y'all to take a look at how things are lining up, okay? That's what I want y'all to take a look at. Okay? Then we want to do something here. Okay, can anybody tell me why I drew what I drew and where I drew it at? If you can explain it to me, then you have a good understanding.
Is it because that's where it, oh, stop it, bro. Is it you drew the first resistance and the second resistance because that's where they keep hitting it or bouncing? Or they not going past that line? That's better.
You doing some work?
Okay.
Because
So,
the green, oh, sorry.
no, go ahead, go ahead.
The green candle on this day, that green candle where the volume is like really high next to the red one, by the circle. It's
right here. Shahi, if that's you, mute your phone for me, please.
You're not gonna do work. You're not
yes.
do work.
That one did not break above
Gonna do work.
the other
You're
one.
not gonna do work.
So it's a basing candle, right?
Gonna do work.
Okay. So
Why is that's that first line you drew? Is it because that's the lowest point, like the swing low?
Who is that? Who is that?
Courtney.
Courtney, you've been on fire. You've been on fire.
What
Thank
was
you.
the question?
Yeah, go ahead, Lo.
No. What was the question? I heard the answer. So what was the question?
The question is, why did I draw what I drew where? What's the reason for me drawing stuff how I drew it? That was the question, right? Courtney's answer was correct. I know it was a broad question, but she's showing me that she has an understanding of what's going on, right? So if we start at the left of the screen, price does not break this level. Price never breaks this level when we really think about it, right? I mentioned earlier, where does price go? Again, back on the road, right? When you stop versus when you turn around, so on and so forth. If you're driving somewhere and you're stopping for this amount of time, that's important. That's important. So I drew, because this is where price got to, and it halted. It didn't necessarily pull back because this is not a pullback. This is a pause. So what about this level made price pause is the question that I'm asking myself, right? Now, if we extend the line, look how this level is just respected. We didn't know that that was going to happen when we drew the line right there. All we did was make a note that this level is important is because it caused price to stop. We didn't know that these levels were going to be respected, right? But what did I say? I said if it's something significant enough to make price stop, slow down, pull back, then it's important to me. Okay? So moving along, we have these levels. Price comes down, hits the level, bounces right back up. comes back down, pause, shoots up. And shoots up very nicely, may I add. So from right here, really shit, way down here. Okay, so price did break that level. I apologize, I didn't see that candle. But that's okay, because this is the only candle that did it. And then we see that the seller pressure coming in, we see it coming in, we pause, and then we bounce up from here to there. Oops, to there. It got right here on this candle. It got right there, and then it pulled back, right? And so again, why did it pull back? So I'm drawing this level because this is where price stopped. So now we're starting to get into things outside of this chart and session, but now we're starting to get into the intricacies of price action. So price goes all the way up here, right? And it pulls back. So this whole thing right here is considered a faker. Sorry, y'all. This whole thing is considered a faker because number one, not because it's a wick, that does have something to do with it, but this is not visible on a higher time frame. Right? So now price comes back down. It comes back to the level that we already had. It goes through and it comes right back up. When we see candles like this, this is a faker because it came right back down and it went right back up. There was nothing about this that was significant. Once it does that, it starts to rally up. It comes right here. All of these levels have some significance to it. All of these levels are respected, or they mean something. They add up, right? So we can see from here to here, we have a lot of things going on. So price drops down. Again, this was our supply zone, right? Remember, we marked that as a supply zone, right? We also said that this was the guy who started it. And we said that that guy is the guy that takes control of the territory, right? So he came down to here. He went back up, okay? Now he broke this guy. He broke this guy. He went up, he came back down. That's okay. That's okay, right? He went up here, he came back down. So this guy right here is now in control of the market. Because look how he pushed price up from here to here. This guy to this guy. That's from $45 to $57. If you were in this option, which I was in this option, I ate off of this, right? So to put things in perspective, this went since this was the high, my premium that I got into, my premium for the NEO option that I had, it was a little bit more expensive. I normally don't go this high, but I just have a certain conviction about NEO. So my premium was $1,300. My premium went all the way up to $2,100 once it hit this high, right? So now that's getting a little bit into entries and exits, but I want y'all to see how it translates. So this guy held the market, right? It isn't until, so this is buy bias all day, buy bias all day. Now, once you start to get more advanced with your charting, you see that price comes here, right? Damn, what just happened? Okay, there it goes. So you see price came here, right? And so now you start to see that this guy right here is starting to potentially hold the market. Well, now I shouldn't say hold the market, but this guy here pushes it all the way back to this supply zone. Remind yourself, this is about a $12 move right here. So he pushed it all the way back down to $12. Now, again, look at it. This is the guy that held the market. So this is considered a what? Shango, what is this considered?
Which considered? I'm not sure if we talk.
The circle that I just drew. And I'm not being specific, but the name of this does not change. So what is this considered?
That is the
It starts with a B.
starts with the P.
Breach.
The breach.
Thank you.
I was right. The breach of the, because that was the former support, but now it's become the new resistance.
Bingo. Shout out to whoever said breach, right? So now we've breached this level. So what does this look like to me? This looks like a sell bias. We've taken this guy out, which was responsible for carrying the market, carrying the stock, I should say, all the way up to highs, right? So just think about it. Just think about it. Don't even worry about what's going on with the chart. Just think about it. So you had somebody, or you had a price that it was a reaction from that price plus $12. Price comes all the way back down and then below the guy who had the energy to take the market all the way up.
Mm-hmm.
Your red flag should be showing itself a little bit, right? So until 45.18 is taken out, this area here, this is a sell bias. Does that make sense to everybody?
Mm-hmm.
Okay.
So at that, I'm sorry. So at that point, we could get rid of that zone. That's when we would disregard that zone.
Who is this?
This is Courtney.
You are on it. You are on it. Absolutely.
Okay.
Right? Now, even if you keep the zone up, because this may be just a good reference point, right? Even if you keep the zone up, I lost my train of thought. I'm sorry. Even if you keep the zone up, right? It's a good reference point. Now you know that the zone is weakened, right? So you just know that it's not a fresh zone. Remember what we said about fresh zones earlier. It's not fresh. Right. So you can keep it up as reference. That's no problem. But yes, the zone would almost be invalidated. It's now weakened.
Thank you.
No problem. So let's go to Fastly. Yay, I owe them one more. What was the last one? XLY. Never mind. Okay. So let's go to different time frames, shall we? We've been on the 1 hour all day. Y'all throw in the chat real quick what time frame y'all normally trade off of. Or y'all could unmute yourselves and say it. For the people that want it Fastly specifically, what time frame are y'all looking at? Nobody? Okay. So what we'll do?
4 hour.
A 4 hour?
Yeah.
Okay. Okay. All right. So now a 4 hour chart. Let's just move this back a little bit. Let's just move this back, move this back, move this back. Okay. Oops, not that far back. Okay. So let's just do one of these. Okay. So what do we see? Now, without looking at anything, for me, I see, without going into the intricacies, right? I see a strong move up, boom, right? I see a pullback, but not only do I see a pullback, sorry, y'all. Let me do this again. Okay, so without going into the intricacies, what I also see is that from right here, and again, this is just a look at it, right? So from right here to right here, let's pull it back down a little bit. I see a zone, right? That's just me pulling up the chart and looking at what's going on, right? So without even going into a lot of jargon and breaches and support resistance, guy who started, without even going into that, I'm looking at, so Shango, what do you say that this is a buy or a sell? What do you think?
I mean, as a newer trader, I'm seeing a sideways chart, so it seems like there's consolidation going on. I mean, this is a pretty. Is this like a 1 year chart we're looking at? It looks like it said it goes from September, October.
This is
right?
a 180-day 4-hour chart.
Okay,
So it's a
180.
4-hour chart.
Yeah, so for the most part, it looks like it's going south. I mean, there was some major action there, but in that zone overall, it's kind of been trading in that same area.
Okay, Elizabeth, what do you see? Duncan, what do you see?
Sorry, I had to walk out really quick. Sorry.
It's okay. Right? So the point that I'm trying to make, and we'll go through it because I still got to go over XOY, and I'm going to try to be done with this by 11 p.m. So the point that I'm trying to make, right, is it's going up, it starts to base, right? So within this, of course, we want to look for supply and demand zones, and your chart does not have to be this far out. You can get in, so that way you can see what you need to see. And I also want to put out that on some charts, you may not see supply and demand zones. And if you don't, that's okay. Don't force it. Go to a different time frame. Go to a different time frame. So for me, this level is holding. Where the bottom of this rectangle is, it's holding. Yeah, we had a little drop off right here, but this is not significant. I can draw the circle around it. That's not significant, right? So it comes back in. So if you ask me, and then let's do this. Let's also do this. What am I looking for? Let's do this. Is this not a basing candle?
Yeah, so it's looking like a good buy. You do some more research on the company and some other things, but to your point, it seems like it's going in the right direction for a buy.
Does everybody see that?
I was going to say, so when you guys are in the chat and you say this is about to pop, this is usually what you see, right? To make you want to say that?
Yes, but sometimes I'm able to forecast it ahead of time.
Right. I mean, right. And I see this being a small pop. I don't see this necessarily being something huge. But I don't know much about this company, so I don't know.
But look at it this way, and you tell me if this is small or large to you. This went from $83 to $97.
Oh,
is that
true.
a small pop?
No,
True, no. That's
nice.
not so bad.
That's a great pop.
Right? So again, look how big, and even without even doing that, look how wide the rectangle is. That's a lot of space, right? Not only that, what do we see? We see price rally. We see price base. We see that demand zone form, and we see price rally again. Now, so for me, because this is current market, I'm looking to see if this turns into a base. Now you're getting inside of my mind.
Mm-hmm.
If the market opens and we get that pop and we close and that candle that opens, it gets above $91, right? And this is what separates, this is the mindset that you should have as a day trader, right? Because a lot of times we want these unrealistic, or we have these unrealistic expectations of the market, but a 4-point move in a stock could be a decent percentage in an option.
Mm-hmm.
So keep that in mind, right? So if I'm thinking ahead of the game, I'm looking at this and I'm like, okay, shit, let me go ahead and draw this little zone right here. And if I can get that green candle to break above this, then I'm okay with a 4-point move, 5-point move. Now, once it starts to hit the top of the zone up here, I'm watching, and this is where volume comes in, because I want to see how it approaches, what is the behavior as it approaches the top of this zone. If it's strong volume, then I'm like, okay, cool. right? So we could potentially say that this right here, boom, boom, is another zone. Oops, that was all wrong. I'm sorry, y'all. That was all wrong. But right here, boom to boom, we could potentially say that that's a zone.
So let's
Right.
say you step away for the day, like you're on a call, something happens. Where does this have to hit for this to be too high for you to not want to get in anymore?
Say that again for me, please.
Like say something takes you away from the chart for a few hours or something, like let's say all those things happen, but you're not watching the chart.
Okay.
Like the things that you're looking for, where would this have to hit for you to say, oh no, that's too much, I'm not messing with it till it drops again?
Okay, so let me know if I'm answering your question correctly. But essentially it right here, right?
Okay.
So if I draw my base and you can't see it because it's overlapping, right? So if I draw this as a basing candle and it pops out, to answer your question, I'm like, okay, I need to see a little pullback or whatever the case may be. I'm looking at for it to pull back to the top of this zone. So do you see how I have it highlighted right now?
Mm-hmm.
So I'm looking for a pullback to right there, potentially, before I go ahead and take it up. Now, if that pulls back and it holds right here, I'm no longer looking at the top of this rectangle as take profit. I'm probably looking up here now, around up $100. That makes sense?
Yes, thank you.
So
but you would take that trade, you would scale down to a lower time frame to look at where you would possibly take that trade, correct? From the 4 hour to the 1 hour.
Correct. So I have these zones drawn, right? So, and again, I'm sorry, y'all, we didn't get to get into this because y'all had really good questions. But so I'm going down to a 15, a 5. And so to answer your question, Duncan, I think that was you, Duncan. To answer your question, so let me extend this. Let me go like this right here, right? So let's just say that the chart comes up. So let me do one of these and hopefully we could get it to. So let's do one of those, right? So let's say chart goes up, right? And it starts to come back down. At this point, I'm looking for rejection off of this level. And again, y'all can't see it because it's a zone within a zone. But right here, because if I highlight it, you can see where that rectangle begins and ends. So I want to see rejection off of the rectangle, meaning I want to see some wicks. I want to see some confirmation patterns, maybe a double bottom or, a doji, a pin bar. I want to see something like that to come here on a lower time frame, whether that's 15, 5, 1 minute, 3 minute, whatever time frame that you use on a lower basis. I want to see it reject before I'm comfortable enough. So if I'm on a low time frame, I'm riding it from right here where you see this oval up to 96. Once it gets to this area or as it approaches that area, I'm looking to see the volume, if it's supportive, if there's aggression to break above this level. So that's where the volume comes in at. You always just want to pay attention. You want to go to your lower time frames to confirm. Does that make sense to everybody?
Yes.
Okay. All right. So it is 11. I'm going to do this last chart, y'all, and I somewhat had it marked up already. And then we'll go ahead and we'll disconnect. So if anybody has any last minute questions, please go ahead and ask them now or throw them in the chat. If not, what we can do is if you have additional questions, hit me up. We could talk about doing something else on the side. But let me know, okay? I want y'all to practice this, okay? I want you to take what you learned and apply it to charts tomorrow. Again, that's part of the reason why Sorry, y'all. That's part of the reason why I did it at this time, because I wanted it to be fresh. Okay. So XLY, if you are a cousin, you've been on XLY. Now,
Wait, that says Neo up in the left hand corner.
oh, I'm sorry. Thank you. Whoever that was. Thank you. Thank you for that. Okay. So if you are a cousin, you probably some of y'all cousins, that's why you wanted me to look at this, and that's okay. That's okay. But that also tells me that you hopped into something because somebody else said something and you did no due diligence on it. Because if you're asking me to go over it, that means you didn't know what was going on when you got into that play. So you either overpaid, or at this point you got in, you got a little profit, you don't know when to get out, right? I could be wrong. I hope I'm wrong. But I digress. Let's move forward, because now you have the tools in your toolbox, okay? So this goes from here to here. And again, I'm gonna try to keep it broad, because I'm only gonna hold y'all for maybe about 10 more minutes, if that. So this goes from here to here, right? And it pulls back. Where does that pullback stop? That pullback stops right here, right? Now you may say this might be what, maybe 30, 40, 30, let's say 30, 40, 50 if you want to, % of this initial move up. So this is a pretty decent pullback, right? So now it holds it, it holds it. All of this is it being held, right? Because what did I say earlier about these being fakers? When you see something come down and it goes right back up, that's a faker. Okay, so it comes back up, and where does it go? And I'm starting from the left of the chart, and I'm just going all the way through it so y'all see it, right? It goes here. Okay, so it drops again, and it makes this low here. Okay, we got that up. It makes this low here. And I'm sorry if y'all can't see it because the volume is down there, right? But it makes that low. Again, we have another faker, because it goes down and comes right back up. So if you are somebody that sees this faker, you're like, oh, okay, maybe I can go ahead and pay attention to getting into a trade and take it back up to the previous threshold, right? Now, I'm purposely not going into the guy who started it, so on and so forth, because when you get the replay and when you put this on your own charts, I want you to be able to see where those things are. Okay, so everybody on here, rewatch the video. I know we put in some hours, but rewatch it. I hope y'all took notes, because so now you know what to look for. Okay, so now we go up from here. I'm sorry, let me start back down here. So now we go up and we hit this guy, right? And we break above it. And then not only do we break above this guy, we break above this guy. So now we just above everything, right? So again, if you're marking your levels as you go, this level would have been marked for you already, right? So now a little more about trade management now, because this is not something that we spoke of, right? So if it hits this level and you don't know whether or not, because if you are catching on, if you're picking up what I'm putting down, you may start to look at this like, okay, let me see if this turns into a basing candle. Oh shit, hold on, I'm sorry. That's the wrong. Sorry about that, y'all. So if you're picking up what I'm putting down, you may start to look at this and it's like, okay, let me see if this turns into a basing candle, right? And that's okay. I like it. I like the way you're thinking if that's what you're thinking of. Because look how price respects this area, right? So again, back to the trade management. So if price hits this level, because again, this would have been our take profit, because this is where price, this is the threshold. This is a swing right here. This is the max threshold. Price had not gotten above this point up until this point. So this is our max threshold. So if I'm going into trade management, now I'm looking about, okay, let me think about either a trailing stop or a stop limit. Let me protect what I have. So if you're willing to, so some of the people, if you've been in an option trade, or if you in Dame's group, shout out to Dame, excuse me, if you're not in that, please go follow us on IG. If you don't have him, follow me. I'll make sure I shout him out tonight so you can get into his collective, okay? So let's just say if you're one of those people and you know, you're starting to think about, and you've heard us talk about runners. I'm gonna take some off the table and I'm gonna let the rest run, right? That's okay to do in this position because you done hit take profit. This goes from 153 to a high of 155, 156, right? So Dame, if you up to it, you could put your IG in the chat. So you got some people asking about that if you up to it. You're gonna put mine, ZA. So yeah, this is where we could start to put trail and stops and so on and so forth, right? Now, overall, look how this market holds, because once price gets there, it doesn't stay up there long. And then now it just takes a turn. It just takes the turn, right? Now it comes down, where does that move end? That move ends right here. Look how this turns into support equals resistance. This was support right here. Well, really, it's just support. You don't even need to even bring up resistance. It supported it right here. And then you got this massive move back up to the top. Boom, boom, back up to the top. Okay, right? So again, you're looking at either managing or taking profit here. Okay, so now price is broken above this threshold, which now we're right here, because I know some people are probably in this trade. So let's talk about it if we're going to talk about it, right? So with price above here, I'm looking at this as buy bias all day. And XLY is consumer discretionary, correct? I believe it is. It is.
Yes.
Okay. So we already know how those names react. And if you don't know, then just pay more attention to the top holdings. Pay attention to the news. Whether the stock or the top holdings react to stay-at-home news. Whether they pull back. So again, it's an overall market awareness, right? So right now we got a little consolidating period. Well, it's kind of bouncing back and forth. But as long as price is above this guy, this is buy biased all day. Okay, so everybody can unmute themselves, throw it in the chat. Number one, does that make sense? Number two, did you learn something? Number three, do you feel like you're now a better technician? I want to hear feedback.
3 yeses.
Yes, yes, and yes.
Beautiful, 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 beautiful. I appreciate y'all.
Likewise.
I appreciate y'all. So again, I'm judging myself off of how well you guys are able to take this information and turn yourselves into better traders, right? So if I want y'all to tap in with me tomorrow, not to say that, you know, I done turned into a coach or whatever the case may be, but please tell me how you were able to take this information and execute a trade or to better read a chart tomorrow. Again, that's the reason why I did this so late or at 8 p.m. because I wanted you to be able to take this information and apply it tomorrow.
I already know where I've made mistakes the last 2 months.
Beautiful. Is that Duncan?
Yes, it is.
Beautiful. 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 So again, I'm basing my success of what I brought to the table on how you perform. Okay. So do we have any last minute questions? It's 11:10. We done went a whole hour over, but that's okay because I'm glad that y'all got something out of it. Does anybody have, first of all, the people in the chat, just ignore that question. That's number one. Okay. Don't even just act like you don't even see it. But does anybody have any last minute questions, comments, concerns, feedback, whatever? Let me know if you have anything.
Just a small one. These lines you're drawing, can those be drawn on a live chart? Like if I'm looking at Thinkorswim while it's going, can I draw that on there as it's ticking?
Absolutely. That's the point of me showing it to you and why the lines are extended. Absolutely. Absolutely. You don't want to sit on the sidelines and wait till shit done happen and now you like, oh, okay, well, I see what I could have did, because could have did ain't gonna make you no money.
Got it. Okay.
Mm-hmm.
Okay. Kenyatta, if you still on in the chat, or if you want to hop on the mic, did you find this useful? Do you understand what has happened today or what's going on? I'm gonna hit you personally. Beautiful, beautiful, beautiful. Okay. So if nobody else has any last minute, let's see what's going on in the chat. Beautiful, beautiful. I appreciate each and every one of y'all. Kyle, Kenyatta, Richard, Elizabeth, Sean. Damn, I done forgot your name.
Now you got it. Shango.
Shango, thank you.
Thank you.
Courtney, Duncan, Elizabeth, Jeff, Dame, Alhaji, Ashley, Lola. I appreciate all of y'all. Leah, Shahia. I appreciate y'all for believing that I could be able to deliver the message in a way that you guys are able to understand it. Cantrell, Eldon, I appreciate y'all. So today was Mimi, thank you. I just wanted to go ahead and try to introduce y'all to, again, how institutional, Callie, what's up, Callie? I wanted to be able to introduce y'all to how institutional money is trading, right? So once we get this and y'all get this down, now we can start to elevate the conversation. Okay?
Yeah, so, we're going to need 202 and 302 here soon.
I want everybody to get this down, right? And again, the recorded is going to come out. You guys are going to get it free of charge. No worries about that. You have the slideshow, the slideshow. So look at that. Really, really